Welcome to the Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London. Now, these are top stories. Oil ban. The U.S. and U.K. bar Russian crude. Moscow retaliates against sanctions, ordering restrictions on raw material exports. We look at commodities across the board. Futures call higher. Inflation risks punish bonds. The LME will not restart nickel trading before Friday. Plus, Russia's bombardment of Kyiv intensifies. McDonald's, Coca-Cola, Heineken, and Starbucks join the corporate exodus as Fitch warns of an imminent default. So it's all, of course, what we're happening and the huge distressed possible assets that we're seeing in the markets. So let's get straight to some of these European stocks, the DAX futures, the FTSE 100 futures gaining a little bit. Now, this is on the back. It's counterintuitive, of course, especially if you're watching the horrific scenes over in Kiev and elsewhere in Ukraine. And if you put that against an effective oil embargo from the U.S., you think, well, why are these markets increasing? Now, this has to do still with the joint bond issuance, which is getting traction. The joint to actually follow and put in place some energy and defense spending for the European Union, but also it means that central banks could be a lot slower in putting it up. The inflation concern, of course, filtering through commodities, filtering through some of the bigger asset classes, is once again putting out in commodities. So UK natural gas currently down a touch, but if you look at the record upon record that we've seen, this is really where it's playing out. Iron ore down a touch as well, but it has been at a record high over the last couple of days. And then you can see the IBEX over in Spain gaining some 2.8%, the FTSE gaining 1.5%. I think when you speak to a lot of analysts, when you speak to a lot of banks, they say watch out for distressed markets. The other thing we need to watch out for, of course, nickel. We spoke extensively about nickel yesterday. At the moment, it's not trading anywhere because Shanghai also had to close it down. Now, let's look at the bigger story, some of the other assets that we're looking, cross assets. If you look at, so Brent crude trading, of course, at levels not seen in a decade. Wheat, for example, hitting a record high only to plunge by exchange limits, and European natural gas, again, it's a record after record, and that's just in commodities. Brent crude currently at 129. The big question is, why do you not release more reserves at this level? Are they expecting the situation to get worse? We know that countries around the world are trying to figure that question out. U.S. 10-year yield 186.63, and we also look at ruble, the fallout that we're seeing overall extending to the ruble, European banks, and of course, a lot of companies with links to Russia. Now we go back to the war in Ukraine. The U.S. and the U.K. have announced a ban on Russian oil imports in a major escalation of Western efforts to hobble the country's economy. The EU, however, has outlined plans to gradually reduce its dependency on Russian energy. Meanwhile, the UNHCR says more than 2 million people have fled Ukraine since the Russian offensive began. Over 1.2 million Ukrainians have crossed into neighboring Poland. We're joined by our Europe correspondent, Maria Tadeo, in Paris, where European leaders will meet to discuss the crisis, and Tom McKenzie, my co-anchor of the show, in Poland near the Ukraine border. So, Tom, bring us up to date with the latest situation at the Poland-Ukraine border.
Francine, yeah, you mentioned that 1.2 million number. That is just the number of people who have crossed over from the Ukrainian border into Poland. We are on that border point now, one of the many border points, of course, and what you're seeing as those numbers continue. We're seeing hundreds of people crossing today. The realities on the ground are it is very cold. It's -2. This is just the next stage of these people's journey. You can see the tents behind me, people providing, volunteers providing hot food and some shelter for the refugees that continue to cross this border. And of course, you are now looking, in terms of context, at the biggest refugee crisis in Europe since World War II. You had the Polish military on the ground, the Polish police, and volunteers from the UK, France, Germany, Belgium. I've been meeting them, speaking to them. I've also spoken to the UN head who's coordinating efforts here. He says, look, the logistics are here on the Polish side of the border. They are pretty rudimentary, but it's on the Ukrainian border where the concerns continue. People having to wait overnight, sometimes days, to get across that border, many of them with young children. 90% we're talking about women and children in freezing temperatures.
Yeah, truly heartbreaking stories. Tom, thank you. Maria, when you look at an effective oil embargo from the U.S., in a certain degree also from the U.K., what does this move from the U.S. mean for Europe?
Yeah, Francina, you're very right to say this is the United States and the UK, and in many ways the market already has sanctioned these assets, fearing that in a week's time you can be holding something that is toxic. When you look at the European response, however, for the time being, we're not getting anything that looks like a full embargo, Francine. We know that there is a will to unplug from Russian energy, coal and gas. Yesterday that was made very clear by Ursula von der Leyen, the head of the European Commission, who said we do not want to use Russia as a provider. We want to go for energy independence. That is a goal that the European Union says they want to achieve in the next 10 years. Of course, when you look at gas in particular, they say they can cut it down quicker in the next 2 years, and by October this year have 90% of storage completed with other producers and other providers. But in reality, Francine, this is still proven very problematic, particularly in Germany. I had an official yesterday who told me this embargo makes Germany look really bad. The optics, once again, around the country are bad. And what we're seeing is that still, even in a situation of war, Germany is very reluctant at unplugging from Germany or unplugging from Russia, I should say. And they still say nuclear energy is something that they do not want to have. So, Francine, you see a lot of the coalition politics here and the tensions around this coalition, where, of course, you have a very important green element that said nuclear is not an option. Of course, some would tell you in a war, everything should be an option.
Yeah, I mean, nuclear is not an option, but also if you restart some of the nuclear plants or put them together, I mean, there's a problem of timeline, is that it takes 5, 6, 7, 10 years. Actually, we need something immediately if you're going to wane off Russian gas. So how does the EU actually stick to its plan? Are we going to use more coal?
Well, Francine, that is also an option. And I've heard from a number of officials say, at this point, you're faced with a question. Do you want to buy Russian gas or do you want to burn coal? Both scenarios are bad. But really, that is the question that countries will be putting to themselves tomorrow when they meet here in Paris and Friday. Ultimately, every scenario looks bad. But what is the least damaging? In a war, as Tom was there, those pictures are heartbreaking. So again, it's not an ideal world, but which one do you go for? The other big question that is coming to mind, and Brussels in particular, is what other suppliers can you have? And there's a lot of talk about perhaps the Iberian Peninsula and Algeria. Remember, Spain is a country that uses gas, but they do not use Russian gas. A lot of it comes from Algeria. So again, it's questions around new pipelines that could come up. But Francine, you're very right. This is not something that happens overnight. And already aiming to cut it down by 80% in 2 years does seem like a target that looks very ambitious. And the problem here, of course, is that this is a market that is very fragmented. The European energy market does not exist as of today.
Yeah, this is the problem. Even with the best intentions, it really is always a problem of timelines. Bloomberg's Maria Tadeo and Tom McKenzie. Now let's get back into the key market drivers with Allianz Global Investors Chief Investment Officer for Equity, Virginie Maisonneuve, and Bloomberg's Managing Editor for EMEA Markets Editing Hub, Lynn Thomason. So thank you both for joining us. Lynn, briefly, when you look at some of what the second round effects, of course, on the US and the UK ban Russian oil imports, I mean, there's this line, which is Russia will restrict some raw material exports, but amidst the details. How ugly could that be for the markets?
I think it could be very ugly. I mean, clearly we've seen a big pricing in the markets already. Markets are starting to stabilize, but there's just so many unknowns as to what this actually means and how it's going to play out. And, you know, in the commentary you're getting today, a lot of people are talking about recession, stagflation, which, you know, could be really devastating for a lot of companies.
Yeah, and Virginie, we're trying to work through, you know, to try and understand exactly who this hits, when and how and for how long. What is the market pricing is right now? Is it worst case scenario, or are they just trying to come to the grips of, you know, what the worst case scenario could be?
I think what you're seeing is the volatility in the markets. As you pointed out today, markets are a little bit better, but the volatility in the market is reflecting that uncertainty, and the uncertainty is really scope and duration. I think if you are an investor and you are in stocks, what you really need to do is understand how your companies are going to react, understand what protects your margins, who has pricing power, and of course, keep looking at the long term with the uncertainty, building a margin of safety if you want. But that is the key thing, along with diversification in your portfolios.
But what I don't understand, Virginie, is that if you look at the risks, stagflation, migration, of course, global supply chain issues, cyber, everyone uses energy. That's really skyrocketing. We're seeing record on record for diesel and gas prices in Europe. Why are the markets up? Why is the European stock 600 gaining 2.5%?
That's a very interesting question. I think one of the key points that you made earlier on is that with all those risks building up, expectations regarding the normalization of monetary policy is clearly for a slowdown in that normalization. So that's one point. The second point is we've had, clearly some very sharp corrections, and that is, if you want, in a bit of relief. But ultimately, we do have to try to understand how those risks are going to play out, and also the coordination of responses. I know we have a divergence with regards to the oil embargo between US, UK, and the rest of Europe, but generally the response has been quite unified, and we can see the favorable aspect of putting in place very rapidly measures and initiatives. So we have the $1.5 trillion spending bill in the US. We have the 200 billion plus fund in Europe. So things are moving quite quickly, and I think the market finds some level of reinsurance in that.
Oh, yeah, Virginie, thank you. Lynn, when you look at some of the things that we're watching out for, so we could see a big ratings agency, cutting Russia to junk. I don't know whether that makes a difference because usually they're backward looking, or we could still see a default of some sort or something freezing in the markets.
Yeah, it seems like very much people are talking about, Russia is going to default, but then I think the big question becomes, okay, who are the people affected by that? Where are the fault lines? And I think that's still the big unknown. Everyone knows, that, the default may be coming, and it's really for the lawyers to untangle, but what companies have exposure to this, what investors have big exposures to this, I think those are the big questions right now.
Yes, Virginie, in this kind of environment where, again, we need to look at the second, third round orders, and you could see potentially fourth round orders, who's most vulnerable, either in terms of sectors or even regions or countries?
Well, let's look at who can benefit. Unfortunately, we don't have much stagflation examples from the past. The 70s, of course, were one area. So if you look at who actually is least impacted, clearly the defensive sectors to a certain extent, depending on the duration of the soft commodities price increase, but staples and healthcare, and of course the commodities stocks and companies involved. If you go a little bit longer in terms of time frame in this huge transformation that is in the making, I call it fragmentation in the global village in terms of a new geopolitical order, but also a very rapid shift of national security emphasis towards renewable and energy independence. And I think you have a lot of companies in that theme, along with clearly cyber and technology and AI, that will be going through this difficult time in a relatively good state, if you want, compared to others.
Yeah, and we'll talk a little bit more specifically about maybe some of those companies, Virginie, or certainly some of the sectors. Lynn, nickel futures are not trading anywhere. This is such a crazy story. They're not trading anywhere in the world after prices in Shanghai hit their daily upward limit in the wake of those crazy moves on the LME, and they've also been suspended.
Yeah, what a crazy, it's just a wild, absolutely crazy story. I don't think anyone has ever seen anything like what's happened to nickel. And yeah, there are questions of how do you restart trading in this commodity again when, for all intents and purposes, it's just broken at the moment. And I think, you're definitely going to see a lot of hard questions being asked of the LME as to how did they manage this? Was this followed correctly? Because from the outside, it just looks absolutely chaotic.
Yeah, and of course, this is also used in components that we need for the transition to EV, so everything's interlinked. Lynn, thank you so much. Lynn Thomason there, our markets editor, and Virginie Maisonneuve, Allianz Global Investors Chief Investment Officer for Equities, stays with us. Now, coming up a little bit later, the Greek Prime Minister, Kyriakos Mitsotakis, on Ukraine and gas prices. He's just penned a letter to the Commission President, and he has a 6-point plan on energy transition. Don't miss that exclusive interview at 10:30 a.m. London time. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Welcome back to the Open, everyone. We are 15 minutes into European trading day, and we're actually seeing gains across the board. Now, this is counterintuitive because you're seeing a hardening of positions, both on the Russian side and on the U.S. side, also with the UK banning certain imports of oil, although they said they'll still continue buying Russian gas and Russian coal. Now, I'm unclear why you see a lot of U.S. and European equities, the futures also in the U.S., rising against. Traders seem to be taking stock that actually the risks from resurging commodities can be contained. If commodities go much higher, and we've seen records on record on a lot of these commodities, I don't know what the end point to that is. But let's have a look at the markets with our Danny Berger, also with some specific sectors that she's watching. Danny, is it dip buying? Like, what are we looking at? For example, the autos.
Yeah.
I mean, they're going to suffer because of this.
Yeah, exactly. Yeah, it's a head scratcher. It definitely does feel that way because if you look what's the best performing today, Francine, like autos, for example, they are the ones that have underperformed the most since the war broke out. Autos, for example, before today, down 30% since the start of the war in Ukraine. They're headed now for their best day for this sector since November 2020 when we were getting that rebound out of COVID. I mean, there is some skepticism here whether it is a rebound out of the lows since not much has changed. Perhaps, as you were saying, Francine, even stances have hardened even more. But look, maybe it's a sign long-only investors want to find opportunities to dip buy. To that point, Raiffeisen Bank, one of the most exposed Western banks to Germany, is up more than 9% today. This is its best day since 2020 as well. It's fallen also about 30% since the war broke out. So this isn't undoing that, but it certainly is a lot more buying. And I should say volumes have been pretty high for these markets as well. Now, one individual corporate story, Adidas, they did say that they are well shielded. They still expect growth despite the hit they're taking from pulling out of Russia. They say they see about half of the revenue they usually do in the CIS region because of that. So calming words from Adidas, but Francine, it's obviously not just them. It's not just announcement. It really is market-wide, the worst performers over the past few weeks turning in to the best ones today.
Yeah, so much volatility out there. Danny, thank you so much. Danny Berger, they're helping us through it to understand really what counts and what doesn't, cutting out the noise. Virginie Maisonneuve, Allianz Global Investors Chief Investment Officer for Equity, is still with us. And Virginie, this goes back to a point that you were making, is that it's going to be a lot more volatile from here. What's the next fault line? Are you expecting, and again, what sectors will suffer the most if energy just keeps on going higher?
Oh, so the sectors that suffer are the ones that are price takers and not price setters, right? So you go back to pricing power and margin for each company and each subsector. But I think what you're seeing now is clearly the 3 points of valuation, duration, expectations of the duration of the heightened prices, and of course technicals. And I believe what you're seeing in the markets today is really people doing pair trades. So pair trades is, what's my worst case scenario with the information I have today, and where is the price, where's the valuation, and do I think it's excessive? And what you see through crisis and those volatile times is those periods when those pair trades drive the market, and I think that's probably what we have today.
Virginie, one of the other things, of course, that we're trying to figure out is what Russia means by not allowing exports of certain raw materials. What is the market pricing in right now? And again, who's most vulnerable if it is actually a blanket embargo of exports to the US and Europe because they'll sell to China?
Yeah, and of course, we know what the big commodities are, like, wheat and oil and gas, et cetera, et cetera. So those are the big ones. And although Russia, in the big global economic sense, if you want, is quite small, its concentration around key commodities is really, really important. So at this point, since there hasn't been any detail, I believe the market is not taking this at face value. It will need more detail. And it's everybody working on substitution potential, even if you look at, renewable, which energy security will become absolutely paramount, right? Will there be substitution of materials? So if you look at nickel, if you look at copper, can that spur a huge wave of innovation? And I believe it will.
Virginie, on what the ECB can do, I mean, they're really looking at two things. First of all, banks, whether a lot of them need capital raising, we understand, but we're still trying to work through it, that it's mainly 3, 4, or possibly 5 European banks that have the most Russian exposure. I don't know whether you think that will be contained, and so maybe it's a good way of getting into, once again, European financials. But the bigger question is actually, what do they do with inflation? What does it mean for further tightening of monetary policy?
Well, exactly, and you've put your finger on I think the two key points. One is the duration, the expectation of the duration of the problem. If the crisis is resolved quickly, I think the impairment aspect or the systemic risk aspect is absolutely contained, and that's the unknown. How long will that last? If it is not, if it lasts longer, then which banks are going to have what kind of cushion? The key thing to understand is we're in a situation starting in this crisis with much stronger balance sheet at the corporate level, bank level, than we were in previous crises. And I think that buys time. And that is what we need to look at. What's the resistance level?
Yeah. Virginie, thank you so much, as always, for making us smarter with some of your insights. Virginie Maisonneuve, Allianz Global Investors, Chief Investment Officer for Equities. Now, coming up, no Big Macs, Coke, or venti lattes in Russia. Some of the world's biggest brands halt their operations in the country. We'll, of course, have all of the details next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 24 minutes into European trading day. And actually, we're seeing quite a lot of support for some of these indices. There were yesterday slammed, the day before slammed. But if you look at the DAX, now getting some 3.9%. Now, I don't know whether they're pricing in or they were pricing in the worst. So there's a bit of dip buying or actually just need to work through the second and third round effects of what we're seeing with both positions hardening. Russia saying they will stop the export of certain raw materials without giving details, and the U.S. effectively putting an oil embargo. Now, let's also take a look at what we're watching out for today. At 10 a.m. UK time, the EIA releases its crude oil inventory report. Now, that will be significant. Then at 12 p.m., we are expecting industrial production figures from Brazil. 1 p.m., Russia releases its official reserves assets, followed later by CPI data. And also today, Israel's president visits Turkey amid heightened hopes that the once closed U.S. allies could resume talks on a pipeline project that could carry natural gas to Europe. So we'll have also a look at that. And then I think South Korea heads to the polls in a very close presidential election. Now let's get straight to the Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. The U.S. is banning imports of all Russian fossil fuels, including oil, in a major escalation of efforts to hobble Russia's economy. Washington's move will be matched in part by the U.K., which is banning Russian oil but will continue to allow gas imports. Other European nations that rely more heavily on Russian fuels will not participate. McDonald's is temporarily closing all of its 850 locations in Russia following criticism that it failed to act quickly after the invasion of Ukraine. The fast food chain says it will continue to pay its 62,000 employees. Heineken, Coca-Cola, PayPal, and the owner of KFC and Pizza Hut, Yum Brands, are also suspending operations in the country. OPEC Secretary General says there's no physical shortage of oil at present. Mohammed Barkindo told Bloomberg in an exclusive interview that future markets are paper barrels, but in physical markets, supplies are guaranteed. This as crude futures have risen more than 30% since Russia's invasion of Ukraine. And that's your Bloomberg Business Flash. Francine?
All right, thank you so much, Angel. We're just getting some breaking news out of China and nickel. The Chinese nickel giant has secured the bank lifeline after the short squeeze. I mean, this is an incredible story. We've been keeping an eye on it, of course, since yesterday. We had the LME saying they will stop trading nickel until we think maybe Friday, and then we also had a halt to the upside on the Chinese. So effectively, you cannot buy any nickel futures right now. Coming up, an exclusive conversation with the Greek Prime Minister on the unfolding situation. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Oil ban. The U.S. and the U.K. bar Russian crude. Moscow retaliates against sanctions, ordering restrictions on raw material exports. European markets trade higher. Inflation risks punish bonds. The LME will not restart nickel trading before Friday. Plus, Russia's bombardment of Kyiv intensified. McDonald's, Coca-Cola, Heineken, and Starbucks join the corporate exodus as Fitch warns of an imminent default. Now, this is a picture for the markets. We actually are seeing support with the DAX, the FTSE, and even the Stoxx European 600 gaining some 2%. We're also seeing similar moves for U.S. equity futures. Traders took stocks of risks from a surge in commodity prices following the invasion of Ukraine. We have to remind ourselves that if crude is climbing after the U.S. moved to ban imports of Russia fossil fuels to punish the nation of the war, there is also belief that we have enough stockpiles for the moment, and that could also lead to more fiscal support. The other things we're watching out for is, of course, the Fed widely expect to hike rates by 25 basis points. The break even on the 30-year inflation-linked treasuries. I'm looking at a great chart on my screen, an indication of what market sees as the annual pace of consumer price gains averaging of the next 3 years now is climbing to the highest level since 2013. Now, that has a huge implication and repricing for a lot of the sectors. This is what we're looking at. We see the sectors that were really hammered over the last couple of days, including European banks now getting some 4.6%. Our Danny Berger, of course, trying to figure out exactly why this is happening today. It could be a little bit of dip buying, auto parts, but also insurance gaining 4%. Now, let's return on the ground to the war in Ukraine. The UNHCR says more than 2 million people have fled Ukraine since the Russian offensive began. We understand 1.2 million Ukrainians have crossed over into neighboring Poland. Well, joining us now is Tom McKenzie, my co-anchor of the show. He's in Poland near the Ukrainian border. So, Tom, first of all, bring us up to date with the latest situation at the Poland-Ukraine border.
Francine, yes, we are right on that border at a crossing called Medica. The refugees continue to come over. The vast majority, of course, women and children. The total number, as you say, 1.2 million from Ukraine just into Poland. And that's just in the last 12 days. Those numbers continue to grow. This is the biggest refugee crisis Europe has faced since World War II. And here on the ground, the conditions are very challenging. It's -2, as you can probably see. It's snowing. Behind me, just in front of the border crossing, you've got something of a tent village that has sprung up. The police are on the ground, the soldiers, the military as well, the Polish military assisting these refugees. But you also have volunteers from all over Europe, from the UK, from Germany, Belgium. I've met a number who have come here off their own backs to try and help the refugees here. But the system system is very basic. People are living and sleeping in tents. They're being given food where they can get it, and supplies, medical supplies and warm clothing. But there is a great need for more. The United Nations telling me that it's on the other side of the border that is really a concern for them, because refugees are having to line up on the Ukrainian side of the border and for sometimes, in some cases, stay overnight a number of days outside in these freezing temperatures before they are able to cross over. And then, of course, there's the broader implications for Europe, for Poland and Europe, as they absorb this huge inflow of refugees.
Yeah, and of course, Tommy, then, a lot of the people that are on the ground really not knowing where they'll go next. What sort of financial assistance are the refugees given?
Yeah, that's absolutely right. In fact, I spoke to a mother about half an hour ago with a 2-month-old baby who had crossed over in the last few hours. She had to spend the night outside on the Ukrainian side of the border, and she was being put into a bus to be taken to Krakow here in Poland. She has friends or relatives there who can accommodate her. Many others, of course, don't have those options. Some do. So it's a question of the logistics, busing people to towns and cities across Europe where they either have those connections or people are opening up their homes to accommodate people. Part of that is a long process, of course. In terms of what's happening financially, we know that the Polish government has put in place a $1.7 billion $1.7 billion program of assistance to help fund and pay for the costs of absorbing these refugees, including allowing Ukrainians to work for up to 18 months, putting and giving some money to Polish families to accommodate some of these Ukrainian refugees. But it's the United Nations who say they need additional funding as well. They need at least $1 billion. The local coordinator was telling me last night, to facilitate the logistics here, ensure people have the medical supplies, clothing that they need. Again, as we face up to the largest refugee crisis Europe has seen since World War II.
Yeah, just incredible. Thank you so much, Tom, for that important reporting, because we talk about the markets all the time, but of course it's always at the forefront of our mind what people are living through. Tom McKenzie in Poland near the Ukrainian border. Now on to the rest of the markets, and some of the banks, including UniCredit, says it could be, in an extreme scenario, suffer a hit of about 200 basis points to its capital buffers if its Russian banking assets are wiped out. Now, the Milan-based bank does not consider that to be the base case and still plans to pay a dividend on its 2021 earnings. Well, joining us now is our Bloomberg finance editor, Tom Metcalf. Tom, first of all, if you look at a lot of the banks, I mean, we know the 4 or 5 banks that are most exposed to Russia, but just how exposed is UniCredit?
Yeah, if you're looking for sort of an absolute number, it's about 15 billion euros from what we can kind of piece together from the filings and what they're sort of guiding on. So that does make it one of the most exposed European banks. You've obviously got a couple of others above it. But yeah, they were communicating to shareholders saying, this is what we think is sort of our worst case scenario.
So, I mean, could they actually lose? If you look at some of the capital buffers and some of the, the biggest hit could come actually if they were just to leave the Russian assets. I know Intesa is also looking at options. I don't know what these options would be, like worst case scenario and best case scenario.
Yeah, exactly. So this 200 basis points is like the extreme scenario where every single asset in Russia is effectively lost, but it is really not clear what is sort of less extreme than that, and in terms of probability. So that's kind of what investors have to weigh up. So far, it seems the market's kind of been reassured by the fact there's at least some clarity out of there. They know what could be the worst case scenario, and then I guess there's a gradated thing from there in terms of where it actually ends up.
Tom, I guess the $1 million question is what the second round effects. So we saw it with nickel, and this was a position that we found out because it actually all went wrong. Do we know what our trading desks were like 10 days into the war, or 12 days actually, but are traders still trying to figure out what the fallout is or what the potential ramifications are, or do we have a pretty big idea that the picture is still robust?
Yeah, I think it's still very much a wait and see almost. Yeah, 12 days in, but it's actually many of the Russian-related markets are still kind of nowhere near normal. So yeah, it's been pretty hard to tell so far.
So which are the banks that are the most exposed? I know Raiffeisen is right up there.
Yeah, I think that's number one. And then you have SocGen, followed by UniCredit. And then it kind of falls away quite sharply after that to sort of smaller exposures around Europe.
All right, Tom, thanks so much. Our Bloomberg finance editor, Tom Metcalf. Now, coming up, Bank of America Merrill Lynch, head of global commodities research, Francisco Blanch, on surging commodities. That interview up next. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
As the exchange, our fundamental responsibility is market stability. And had we allowed those trades to stand, had we allowed the price to continue to spike up, as you see on the graph there, it would have been extremely difficult for some of our market participants to continue their activities. And in the final analysis, I think the sign of a good market, a long-term market, and a fair market is one where we do look to the long term and we ensure that we're going to be here not just through this crisis, but for many years to come. And for that reason, suspending trading and cancelling the trades was, I believe, the right decision.
Are you concerned that this might set any kind of precedent? I mean, some traders saying, why trade with an exchange if it's going to cancel your transactions for what one trader described as your own mystery reasons? Is there any precedent here? Are you concerned maybe the idiosyncratic nature of this has not been fully explained?
No, so I think it's absolutely, the reasons are absolutely clear, and I think they're shown on your graph there. It was the fact that the prices that were being seen during that Asian session were becoming disconnected from, I believe, the physical reality. We had to step in to ensure that technical market conditions weren't taking the price in a direction that would be very unhealthy for the market and a number of participants. I absolutely understand that some traders may say, okay, that reduces our willingness to trade on the LME. I hear that, I respect that, but ultimately, I think that we will have more credit in the long term for having come in and made, I believe, the right decision about the long-term future of our market and the financial stability of our market, rather than prioritizing those short-term gains.
That was Matthew Chamberlain, the Chief Executive Officer of the LME, speaking exclusively to Bloomberg's Anna Edwards a little bit earlier on. Now let's keep it on commodities. After a wild week in the sector, we're joined by Francisco Blanch, Head of Global Commodities Research at Bank of America Merrill Lynch. Francisco, thank you for joining us. How much worse can it get?
Hey, Francine. Thank you for having me. Well, we've laid out three scenarios for the crisis, and I think it's in commodity land it's a little easier than if you start thinking of the political ramifications of what's going on. But in commodity land, we have basically three options: either commodity flows revert to what they used to be, something along the lines of where we were 6 months ago, or commodity flows get meaningfully redirected from Russia to China or other countries and away from Europe and the US. And the third scenario is that we end up with major deficits and surpluses emerging in different parts of the world, with Russia being blocked off global markets. So flows go back to the same, we get rerouting or we get major dislocations. And I think right now we are in between 2 and 3 in most commodities. So it can get worse. It definitely can get worse. In the case of oil, we believe the market is pricing in scenario number 2, essentially a scenario where most of the oil that gets blocked off from the US or the UK will find its way somewhere else. But I think we could end up in number 3 if Europe decides to join the US and the UK, for instance. And then in natural gas, I think we are definitely closer to number 3 because it is very apparent you cannot really reroute Russian gas to China in a meaningful way. Europe takes 75% of Russian gas.
Yeah, and I mean, look, it's a beautifully written note because it's so simple, but it also makes for hard reading because the good, the bad, the ugly. I mean, the ugly is really ugly. When you look at what we're focusing on right now, it's just the supply chain. So things coming in and out, whether also Russia, you know, when they say we'll stop certain exports of materials, we don't have the details. We don't know how deep that will go. If the focus then goes on to a recession, what does it mean for demand destruction? Does it automatically stabilize prices?
Well, not necessarily. Demand destruction is never a price stabilizing event. It definitely caps prices, but for example, 2008 we saw a fair bit of demand destruction. So a spike in prices doesn't necessarily stabilize them. It just hurts consumption, hurts the economy. And I think that's why Europe has been very careful about not restricting Russian energy flows because of the potential consequences that it can have in the economy. And I realize this is a big moral debate going on right now, but at the same time, the risk is that we end up disrupting our industries, disrupting our travel to work, and just our daily lives in a very, very meaningful way. Because remember, Russia does supply over a third of European oil, and diesel inventories are very low. In fact, inventories for all commodities are low, but in particular, inventories for oil have come down well below a 10-year average. And that's true for crude oil, for gasoline, for jet fuel, and it's true across the US, Europe, and Asia. So we are at a crucial point.
We're at a crucial point that could mean that we go back to using some of the dirty fossil fuels, including coal, Francisco, or does it mean we actually accelerate the transition to green?
So I think in the short run, Francine, it's, as I said, there's these 3 scenarios, and unfortunately, we're going to probably have to rely more on some thermal fuels. You mentioned coal, but coal prices have also gone a little crazy in the last couple of days. We've seen them cross $400 a ton. That in dollars per barrel, for those that are not accustomed to coal prices, are roughly $100 of oil equivalent. I mean, that's a very expensive coal price when you just have oil at 125, 130. So historically, coal has been a $10, $15, $20, $25 a barrel equivalent commodity. So coal is extremely expensive. We could go back to it. We could go back to oil. We'll see substitution. We've been seeing substitution, in fact, for the last 6 months. But I think the longer term, Francine, we're definitely going to see an acceleration into the energy transition. Yeah. Now, in the short run, you mentioned nickel earlier. Nickel is critical for batteries, so that may slow us down for the next year or 2. But I think the 3-5 year view to me is a lot clearer than the 3-month view. 3-month view, there's a range of options, but in 5 years we will see an acceleration of the energy transition. Because remember, Francine, energy security is like oxygen. You know, in fact, security is like oxygen, and energy security is part of that. You only miss it when you don't have it. People tell me, what's the plan B if we don't get Russian gas? I don't know what's the plan B to keep things running. That's the reality.
So, Francisco, how difficult? I mean, and you're right that maybe it is easier to look at long term than in the next 3 to 4 months. In some ways, we're lucky, I guess, because we're also out of winter, so into summer months where we need some of the fuel less. We were speaking to Fatih Birol of the IEA, who's saying by releasing 60 million barrels of oil, that's 4% of the reserves. Is it a similar amount for gas prices or for some of the gas reserves that we have?
Well, natural gas is more complicated, right? Europe relies heavily on Russia for gas. 40% of European gas consumption comes from Russia. There are solutions being looked at, such as pushing more North African gas into Europe through Spain, to the Pyrenees. That project's been revived. There's going to be more nuclear power potentially looked at. There's definitely going to be a lot more solar, a lot more wind. it's going to be a combination of factors. So as I said, on a 3 to 5 year basis, I think the view is pretty clear. We're going to see a big diversification away from Russian energy from what's just happened. And that's going to be a big fallout of the crisis. Potentially, we could see a lot more U.S. liquid natural gas exports. Remember, the U.S. is exporting 11 BCF a day. We could see that easily doubling, in our opinion. And the projects are in place already, so we'll see an acceleration of capital flows going there. But it's not going to be overnight. It's going to take a while. Right. And I think Europe needs to be careful not to destroy its economy in the process. Because at the end of the day, that's what finances schools, hospitals, defense, everything we're doing comes out of the value we create in the economy.
Francisco, thank you. Francisco Blanch, their head of global commodities research at Bank of America Merrill Lynch, joining us on this complicated and important situation. Now, coming up, more on the war in Ukraine. The U.S. and the UK ban Russian oil imports in a major escalation of Western efforts to hobble the country's economy. We'll have plenty more on that next. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. We are 51 minutes into the European trading day. We're seeing gains across the board. The DAX gained some 4%, the CAC 40 also gaining some 4%. Now, the question is, why are they gaining? So there's one school of thought that says, look, they're gaining because there's dip buying, because we've seen a lot of these sectors slammed. The other one is that actually, because Ukraine yesterday said that they will no longer try to join NATO, there could be some hope on the markets of, if not reconciliation, certainly not a worsening of the situation. Now, let's return to the war in Ukraine. The US and UK have announced a ban on Russian oil imports in a major escalation of Western efforts to hobble the country's economy. The EU, however, has outlined plans to gradually reduce its dependency on Russian energy. Meanwhile, the UNHCR says more than 2 million people have fled Ukraine since the Russian offensive began. Over 1.2 million Ukrainians have now crossed into neighboring Poland. Let's bring back Tom McKenzie, my co-anchor of the program, who's in Poland near the Ukraine reporter and Bloomberg senior reporter for international affairs, Mark Champion. So thank you both. Mark, you wrote this incredibly insightful story for Bloomberg Business Week. At this point, what do we know of Putin's endgame in Ukraine?
Well, we know that it's that the military tool that he's using is changed, and so we had a pretty clear picture of what his end game was at the beginning, where he wanted to end up in control of Ukraine, essentially with regime change, and then just include it, rather like Belarus, into Russia's sphere of influence, even its military space. But that is looking increasingly difficult for him to achieve, and the question now is, if you're going to have a military tool that is essentially trying to just bomb cities into submission, and you end up with a hostile population, what exactly can you achieve? And so you've seen a bit of a shift in what the Kremlin has said it wants to do. Instead of talking about regime change now, denazification, it's now talking about specific goals, including NATO, as you described earlier, but also asking for Ukraine to recognize Crimea as Russian and to recognize the Donbass territories as independent states. That's still a long way away from what Ukraine would be willing to accept.
Mark, it's clear, and this has been well documented now, that Vladimir Putin and his team underestimated the willingness, the ability of the Ukrainian military to fight, but also the Ukrainian people. I just spoke to two gentlemen just a couple of minutes ago. They've lived in Portugal for the last 2 decades. They're Ukrainian. They are crossing the border today to go and join the fight against Russia. How can Zelensky, the president of Ukraine, sell any deal to the Ukrainian people? And what is the role potentially of Israel in negotiating a settlement?
Well, I mean, Israel's in an interesting position. It is, you know, and has a strong relationship with both countries, and so it's a good position to mediate. But there is such a long distance between the two, and as you say, you know, for Zelensky to just accept what Putin is asking for at this point would be almost impossible for him to sell at home. And by the same token, having launched such an enormous war in Europe, and having to now rally his own people behind the idea of the war, for Putin to walk away with something small is also very difficult. And one shouldn't overestimate the NATO issue. I mean, you have to remember that before 2014, when Russia moved in to annex Crimea and stoked a war in Eastern Europe, Eastern Ukraine, and before then, you know, Ukraine's neutrality was written into the constitution, so it's not something that he was enough for him back then, and it's unlikely to be enough now. So there's a much larger agenda.
Thank you so much, both of you, for joining us. My co-anchor, Tom McKenzie, in Poland at the Ukrainian border, and Bloomberg's Mark Champion, following this very closely. Now, that's it for the European Market Open. Surveillance Edition, Early Edition, is up next. Of course, the focus on the fallout from the hardening of positions, and it's unclear whether this is only on commodities, but maybe a more coming together on diplomacy, or maybe whether it's just wishful thinking for traders. U.S. indices, futures, European stocks rising. Dip buyers wagering the global economic impact of these escalating sanctions on Russia seems to have been already reflected in markets because of the brutal moves we saw yesterday. The DAX, counterintuitively for some, now gaining some 4%. Investors bracing for a global inflation shock from this commodity price rally. We'll talk a lot more about commodities. We'll also talk about nickel. This is Bloomberg. Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Russia today has moved from an authoritarian regime to a totalitarian one.
I am rather disappointed with the several producing countries who did not take the necessary measures.
We will not be part of subsidizing Putin's war.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Biden administration bans all Russian fuel imports. The UK only matches the move in part, while the EU says it won't participate. No Big Macs, Coke, or Ventilate in Russia. More multinational corporations stop operations in response to the war in Ukraine. And Jeff Goodlack warns that U.S. CPI may hit 10%. The billionaire money manager says the Fed has done a terrible job in taming inflation. Now, let's check in on the markets. And I have to say, for many, it's pretty counterintuitive that despite the fact that we're seeing sanctions hardening effectively an oil embargo from the U.S. onto Russian oil, European stocks are gaining some 2.6%. Banks that were really slammed yesterday and the day before now gaining some 4.5%. The ruble, 134.0435. It's almost like a penny currency at the moment. But again, if psychologically you think about why we're seeing these gains, two schools of thoughts. Now, the majority of people we've been speaking to think that this is because there's dip buying, because we're trying to price in worst case scenario, and because the markets were so slammed since the beginning of the week, now's a good time or a good opportunity to scoop up some bargains. The other is that there's a belief in the West that this will de-escalate. Now, I don't know if there's any truth in that. A lot of traders trying to be geopolitical analysts, that has not always worked in the past, but we did have signs yesterday of Ukraine saying they would no longer be interested in NATO, possibly to save, of course, some of the civilian lives. So maybe some of this de-escalation is also filtering through the hope of some traders. The FTSE gaining quite significantly, and we're seeing similar gains for the FTSE MIB, and of course what we're seeing in the DAX, getting some 4%, one of the biggest gainers. Again, because of their exposure and proximity to Russia, they were the ones that suffered the most in terms of indices. So the U.S. banning imports of Russian fossil fuel, including crude, while trying to throttle Moscow's main source of income. Joe Biden says he will try to minimize a price hike at the pump. The U.S. president has told reporters that the move will deal a powerful blow to Vladimir Putin.
This is a move that has strong bipartisan support in Congress and I believe in the country. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war.
Now, the UK government says it will match, in part, the move by the Biden administration. Britain will also be halting Russian oil imports while still accepting natural gas and coal. Other European nations will not participate. Well, we're joined by our Europe correspondent, Maria Tadeo, in Paris, where European leaders will meet to discuss the crisis. So, Maria, first of all, what does this mean for the U.S.? It's easier because they're further away and, of course, less dependent on Russian oil.
Well, Francine, they're further away. It's easier for them because, of course, the impact that they have in the actual transactional relationship is much smaller than the European Union would have. And I'm often reminded that for every dollar the United States is going to lose on these sanctions, the European Union, and in particular countries like Germany, could stand to lose 10. So, of course, they're much more exposed on the economic front. Now, when it comes to this embargo, full embargo announced yesterday by the United States, I was told by an official it is interesting that it happens right before European leaders meet tomorrow in Paris. Of course, this will be a subject of conversation. What do we do with the energy crisis? How do we speed it up? Yesterday, we had hints from the head of the European Commission, von der Leyen, saying we need to find new suppliers. We need to find alternative ways to get energy into our continent. We have to speed up renewable, and we have to become much more energy efficient in terms of the storage that we do. But again, the big issue here, of course, is that Germany has said we're not going for the nuclear way. That is not something that we're doing, essentially vetoed that decision yesterday. We say we want to move in with LNG. We want to do it at lightning speed, but of course that is going to take time. And for the time being, we simply just cannot unswitch from one day to another when it comes to Russia.
Yeah, again, it's a timeline problem. The EU says it has plans to cut Russian gas dependency. I think also the Greek Prime Minister has a very clear 6-point plan on how he'll do it. We'll speak to him in about an hour and a half from now. What's actually doable?
Well, Francine, what the Europeans say is that they want to cut down this gas dependency by 80% in the next 2 years, which already on paper is a huge target, and it seems very ambitious. Now, the problem, of course, as you know very well, Francine, is that right now, this date, there isn't really a unified European energy market. The exposure really changes by country. The energy mix is really different by every member state. So again, the problem is, are they talking about a European level, or is this just about individual transitions that need to be made? The other thing that Ursula von der Leyen hinted at yesterday is an investigation into Gazprom. She says that Russia is not acting like a reliable partner, and it's making threats to the European Union, perhaps also hinting that they want to cut down the relationship with Gazprom, which has been very, very profitable for Russia earlier than expected.
Thank you so much. Our European correspondent, Maria Tadeo, of course, who will be following the proceedings in Versailles. Now, European Open co-anchor Tom McKenzie, my co-anchor in Poland near the Ukrainian border to report on the latest on the ground. Daybreak anchor Danny Berger is here with me to discuss the corporate exodus. So, Tom, let's start off with you. Bring us up to date with the latest situation at the Poland-Ukraine border.
Yeah, Francine, well, just a couple of 100 meters that way is Ukraine and the border. The crossing is right here, and you continue to see refugees coming over that border in trickles. The number that we've had from the United Nations is 1.2 million just to Poland alone. And again, that's just in 12 days. You're looking then at what is the largest refugee crisis here in Europe since the Second World War. Here on the ground, it's pretty brutal, the conditions. There's a bit of a tented city that's been built up here. There's a place and there are spaces for people as they cross over the border to warm up, get some hot drinks, some food, and pick up some supplies, clothing, and some medical stuff as well. But really, it's pretty threadbare despite all the efforts of the volunteers that we've seen on the ground here, the Polish, but also volunteers from Germany, France, even the UK. And I met a couple of guys from New Jersey just a couple of minutes ago, flying over from the US to help. The United Nations tell us that they expect these numbers to continue to increase. They're particularly concerned about what's happening on the Ukrainian side of the border, where people are having to wait sometimes days before they can cross. And the vast majority of these refugees, of course, 90% according to the UN, are women and children. In fact, we met a woman with a 2-month-old baby who's just been getting into a van, into a small minibus to go over to Krakow, the town here, the city in Poland, before she takes the next step. But these are people who have essentially lost everything, and they don't know, of course, when they're going to be going back to Ukraine. And many of them, of course, split up from the men in their family who have been forced to stay at home and in many cases fight.
Yeah, because of martial law time. I mean, some of the stories are just absolutely heartbreaking, and it's really mobilized many people around the world, possibly leading to some of the sanctions also coming from Western leaders. What sort of financial assistance are the refugees getting?
Well, just to that point, the coordination, the cooperation that we've seen on the national level is being reflected to some extent on the ground here. This is just one of the border crossings. Of course, there are multiple border crossings between Ukraine and Poland. And just seeing that international mix, again, from the US, the UK, France, Germany, all coming down here, volunteers to help and assist. In terms of the financial assistance, Poland earlier this week pushed through some spending of about 1.7 billion US dollars. Part of that is going to go to Polish families who are taking in Ukrainian families. Part of it is going to be helping Ukrainian children get into the schooling system here in Poland. And they are also going to allow Ukrainians to work here legally in Poland for 18 months. But the Polish government says they will need additional funding from the European Union. Again, 1.2 million, the total number of refugees into Europe from Ukraine, more than 2 million. And the UN coordinator on the ground here that I spoke to last night said that number could easily get to 4 million within the next couple of weeks.
Tom, thank you so much. Of course, Tom, with some important reporting on the refugee crisis on the ground. If you look at the corporate response, Danny, I mean, this has, you know, we have hundreds of companies that have said they either are suspending operations in Russia or no longer want to deal with Russia.
Right.
Which ones are the latest?
Well, we're starting to see more of these consumer names, these very well iconic U.S. names that are more entrenched in Russia. And this is part of the change here. I think a lot of them are seeing some of the scenes that Tom is describing. They're getting a lot of criticism on social media. So we're seeing McDonald's, Coca-Cola, Starbucks, ones with hundreds of branches in Russia. Now, to some degree, if one of these firms pulls out, it makes it easier for others. An example is Coke supplies McDonald's. So if McDonald's pulls out, it's easier for Coca-Cola to pull out. But, you know, just even McDonald's in itself, it's really iconic. Decades ago, you had Thomas Friedman coming up with the Golden Arches theory of conflict prevention, that any two countries that have franchises aren't going to go to war with each other because there's an economic interest. But now we're starting to see that separation of that economic interest.
And of course, we're still trying to weigh through, or the banks are trying to weigh through their exposure. UniCredit just the latest, and we don't know. I mean, they have a big exposure, but we don't know what they would do with it.
Exactly. It's much more complicated for these banks to disentangle their operations in Russia and really their exposure to Russia because they face a lot of second-order effects. UniCredit is laying out their worst-case scenario. They did last night, saying 200 basis points they'd suffer in their capital buffers. But they do say, look, this is a worst-case scenario. This is if all of our assets in Russia get frozen. They say that that's not their base case, but I think the overall message from all of these banks and all these companies is the uncertainty. So yes, the worst case might not be their base case, but we see again and again the worst case does tend to play out.
All right, thank you so much. Of course, joining us with the very latest on the ground, Tom McKenzie and our Danny Berger looking at the latest of the corporate exodus. Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we discuss the latest moves, market moves with Nanette Heschler-Feiderb of Credit Suisse International Wealth Management. If you have any questions for her, send them on IB plus TV Go. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high. You know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I can tell you as of this morning, there is no physical shortage of oil. But there is a very strong perception in the market because of the volume that is at stake.
Well, that was the OPEC Secretary General, Mohammed Barkindo, saying that there is enough physical oil to go around in terms of the reserves. Having said that, the Russia-Ukraine war already among one of the biggest oil shocks in history. According to Goldman Sachs estimates, the ongoing conflict in eastern Ukraine only ranks behind the Iranian Revolution in 1978 and the Arab oil embargo of 1973. Well, joining us now is Nanette Herschler-Feiderb, Chief Investment Officer of International Wealth Management and Global Head of Economic Research at Credit Suisse. Nanette, thank you for joining us. We're seeing a reversal, certainly today in the markets. And what we're trying to understand, if the DAX is gaining some 4%, is this because there's a slight softening of rhetoric in terms of NATO adherence from Mr. Zelensky of Ukraine and some of the things that we heard from the Russian side, or is this just classic dip buying?
It is very difficult at this moment to separate, but what is clear is that the market is under the influence of a lot of market psychology. In other words, when there is even the slightest glimpse of hope that we may be seeing a path towards the diffusion of this very grave situation, the market is reacting positively. And of course, because the European equities and generally the European economy was in the front lines in terms of the effects, the scale of negative effects for both the economy and companies, then it is also very clear that it is most sharply reacting to the upside when the news flow is taking a slightly more positive tone.
Nanette, what's most vulnerable? So again, we're seeing on the Russian side saying they will stop the export of certain raw materials. We don't exactly know the extent of that. What does it mean for how you want to be invested right now?
Well, I do think that it is very difficult to trade fluid situations like that. It has also been seen in the past with different sorts of conflict. So I think that what makes most sense for investors is to stick to the general strategy which they have adopted, which I think has to take into account a further increase of interest rates, has to take account of the fact that probably equities do remain still the better equipped than fixed income. But in terms of mitigating investments for this short-term volatility that will accompany us still for a while, undeniably the energy sector in equities is one of the areas that provides shelter. In the best case, growth is picking up and energy is supported by that. In the worst case, it is prices that are continuing to increase and the energy sector continues to be supported as well.
Nanette, is there any doubt in your mind that we're looking at a stagflationary environment? And I have quite a lot of analysts coming on and saying it's impossible to predict the commodity situation in 3 months, but longer term, it will be difficult.
I think we have indeed changed completely the inflationary regime that we are looking at from a financial market perspective. One important thing to observe is how inflation expectations are reacting. And it is a marked increase in inflation expectations that we have seen since the beginning of this armed conflict, of this war. 10-year break-even inflation rates in the US, for example, are back at 2.9%. This was the highest that we have seen so far in the recent history. And it is changing how people are thinking about inflation more longer term.
Yeah, and I have to say we have a great historical graphic looking at, bringing it back to 1973 with the Arab oil embargo, the Iranian Revolution 78. But of course, the world economy is so much more interlinked and so much bigger now. Brent crude trading at levels not seen in a decade, wheat hitting a record high, European natural gas record upon record. How do you hedge this volatility, Nanette?
Well, as I said, the energy sector is the one that is immediately benefiting from this circumstances. This is part of the hedge. I think that also when looking at equities, and particularly when taking a European perspective, dividend stocks are going to make a comeback for investors as a way of investing, more defensive way of investing. I also think that generally speaking, the whole security topic is one that is becoming a top of mind, and so safety and security stocks are part of short-term mitigation measures in portfolios, but also outright commodities. In alternative investments, commodities are looking now towards a very different cycle than still a few weeks ago, especially when you're considering the long-term implications of this conflict, which is towards a more multipolar world where just relations, commerce internationally is going to be having more friction.
Does it mean, Nanette, also that you need to change some of your forecast on currencies? And actually, I don't know whether it means that also be much more difficult to predict what the ECB will do, but what happens to euro dollar, and how does that mean you'll look at some of the equities, for example?
I mean, currencies generally are going to have a short-term outlook and a long-term one. In the short term, anything that is changing the cyclical outlook. So, for example, for Europe, we have already started to downgrade our growth forecasts and instead upgrade our inflation forecast. So it is very natural to see the euro lose versus other currencies. Let's take the dollar as an example, where the economic impacts are less than in Europe. But I think what has to be borne in mind is how the world is changing more generally in the future and how currencies are going to be used. There, the odds are really out for how the dollar itself is going to continue, and the euro as well.
And so, Nanette, I mean, that means what you think, that there's a chance that the U.S., of course, becomes less of a reserve currency also because of the sanctions, and that will move further east?
I think that a number of central banks are going to review their reserve policies, and it may also just simply change how, in terms of settlement currencies and financial payment currencies, how the flows are going to be redirected. And that is very difficult to assess as of now, what the long-lasting effects of these are. But if we are going to assume changes in trade, then we should also be assuming changes in terms of reserves.
All right, Nanette, thank you so much, as always, for joining us. Nanette Hechler-Feiderb, Chief Investment Officer of International Wealth Management and Global Head of Economic Research at Credit Suisse. Now, coming up, Mikhail Khodorkovsky says Russia has moved from an authoritarian regime to a totalitarian one. The exiled Russian businessman says the West should go after all oligarchs. We'll bring you that interview shortly. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Good morning, Francine. The US says Russian forces have intensified their bombardment of Ukraine's capital, Kyiv. Meanwhile, NATO defense ministers are looking to bolster Ukraine's defenses as the Kremlin's assault takes a heavy toll on its civilian population. In a historic virtual speech to the UK's House of Commons, the first time a foreign leader has addressed MPs in the main chamber, President Volodymyr Zelensky repeated his call for the West to establish a no-fly zone.
Well, we'll have plenty more, of course, on all of those stories. Coming up, we look at Russian sentiment in the war in Ukraine and the latest on euro area banking exposure to the conflict. That's coming up shortly, and this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The Biden administration bans all Russian fuel imports. The UK only matches the move in part, while the EU says it will not participate. The corporate exodus continues. McDonald's, Coke, and PayPal are the latest companies that halt operations in response to the war in Ukraine. And Jeff Goodlatte warns that U.S. CPI may hit 10%. The billionaire money manager says the Fed has done a terrible job in taming inflation. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the market's actually gaining quite significantly in today's trading session. It does come from a low base because of the slamming that we saw over the last couple of days, but you can see banks at the moment gaining some 5%. We have to put it into context, and we also have to look at some of the distressed assets. This is the most important thing that we're looking at. Markets Live blog is a lot of traders are saying that the assets are most vulnerable to distress since 2008. What's happening specifically in the markets today is they're trying to figure out geopolitically whether the situation is becoming better, although we're not seeing it from the shelling on the ground, and then the fact that there could be dip buyers wagering the global economic impact of escalating sanctions on Russia, and the fact that maybe, just maybe, it was already reflected in market prices. So the U.S. banning imports of Russian fossil fuels, including crude, while trying to throttle Moscow's main source of income. President Biden says he will try to minimize rising prices at the pump. Now, the U.S. president also told reporters that the move will deal a powerful blow to Vladimir Putin.
This is a move that has strong bipartisan support in the Congress and, I believe, in the country. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war.
Now, the UK government, meanwhile, says it will match in part the move by the Biden administration. Britain will be halting Russian oil imports while still accepting natural gas and coal. Other European nations will not participate. Well, with us to cover the Russian take on the conflict and sanctions, I'm very pleased to welcome Bloomberg's international government editor, Rosalind Matheson. Ros, first of all, thank you. I know you're under extreme stress of trying to figure out the situation on the ground. What is currently being reported in Russia on the war in Ukraine?
Well, it's a little bit hard to tell because, of course, inside Russia, the messaging is being very carefully controlled. Independent media has been curtailed, some shut down, and, of course, social media networks internationally are being shut down for Russia. So how much information is able to circulate is unclear. Certainly, you would imagine that the official narrative of the Russian government and defense ministry on the war is being disseminated far and wide, and that is the message that, as far as the Russian government's concerned, the war is going according to plan, completely according to plan so far. So that would be what's being propagated, at least within Russia. But of course, any country you can still get information, even the most closed off regimes, that is possible. So you imagine that some of the outside reporting of the conflict is filtering in there through some sort of social networks and other communication. And that's also just showing up on the ground. You can see that there are protests that are occurring across Russian cities against the war. Many Russian people have close ties with family in Ukraine. They were born there, they have family there, cultural links, and those communications will be going on regardless of what the Russian government is pushing through its media.
So, Raz, is public sentiment on the special operation in Ukraine and Putin, as sanctions are hitting the Russian economy, turning, or is this really a fiction of the West?
It's also very hard to say. I mean, obviously, there there are signs that things are showing up on the ground. There are signs of food shortages at supermarkets, of other goods, Russian people having difficulty accessing money, using their credit cards, being able to move about, and so on. So certainly some strains on ordinary people inside Russia. It all depends how much that shows up in terms of them blaming the Russian government. Of course, the Russian economy has been set up for many years to weather sanctions, possibly not as extensive as we're seeing now, and a number of companies that are pulling out. But people are used to hardship there. They're used to finding ways to work around, and already they're looking at alternative ways to be able to use money, to be able to use payment services that circumvent the sanctions that are already on Russia. So how much this goes on really depends how much it filters through to sentiment against the war, perhaps against the Russian leadership. It's just a bit early to say.
What is the likelihood, that this leads to a change in leadership in Russia? What is the likelihood that actually things de-escalate and the two sides come more to an agreement?
Well, that certainly is the big question. So far, as we're seeing, there's no let-up in the fighting on the ground and the shelling by Russian forces, including of the capital, Kiev. There have been several rounds of talks at a lower level that haven't really led to tangible progress. It'll be interesting to see the Russian foreign minister and the Ukrainian foreign minister crossing paths tomorrow in Turkey. That's the most high-level interaction we will have seen since the start of the war. Is there a conversation that happens there? But right now, the Russian president is pretty adamant about his demands for what he wants from Ukraine, and the Ukrainian government equally is saying, well, they're not going to give in to those. So where the common ground is on that is still unclear. Certainly the diplomatic push is to try and find some sort of solution, to find something that can at least stem the worst of the fighting. But we're not seeing that so far show up, at least publicly.
Thank you so much, Roz, Bloomberg's international government editor there, Rosalind Matheson. Now, let's also talk about some of the corporate's exposure. UniCredit says it could, in an extreme scenario, suffer a hit of about 200 basis points to its capital buffers if the Russian banking assets are wiped out. Now, the Milan-based bank does not consider that to be a base case, but it still plans to pay a dividend on its 2020 earnings. Well, joining us now is our Bloomberg finance editor, Tom Metcalf, to really try and understand exactly the exposure of certain banks and what this means. Now, Italy, because of a lot of links in the past, Tom, does have quite a bit of exposure. It's Intesa, it's UniCredit. What do we know about that exposure, and what's the worst case scenario?
Yeah, so in the case of UniCredit, there's about 15 billion euros in total. They've got something like 4,000 employees in Russia, about 70 branches, so it is pretty big on within the country. So what they're saying is, look, worst case scenario, if we lose all that, we're going to have that hit of about 200 basis points. And as you say, it's Italy, it's Austria. Those are the big banks that seem to be exposed to Russia.
So what does it mean for capital buffers? Like, do we have any idea? I mean, does this going to be just them writing off some of their exposure, or can they, if they were to sell off some of the exposure, who would buy it?
Well, yeah, exactly. That's the fascinating question, and the sort of parallels with BP and their big stake in Rosneft, right? Like, they're saying they're going to sell it, but to who? So, they're saying this is not our base case. We don't expect it to come to this. But I think what investors are doing are sort of assuming it might well be. But that 200 basis point drop is sort of relatively absorbable within their kind of these big, beefy capital buffers they have.
Tom, how much are some of these assets actually distressed? And I don't know whether we need to go back to 2008 and look at some of the hedge funds and the linkage with banks. It seems, for me, improbable that we're 12 days into the conflict, that it's such a big economy, and we there's not some kind of big exposure apart from nickel. Let's put that to one side, where something could really go wrong.
Yeah, no, look, I think distress is the right word. I mean, these are unprecedented scenarios, right? And if you're talking about buyers, who are the most likely to kind of take on something like that risk? It is probably the distressed buyers, the sort of Apollos of the world, who might be more comfortable with that thing. But I mean, the scenario is the situation is so fluid, it's impossible to know. But yeah, it's everyone's kind of feeling their way through this at the moment.
And so banks are still, how long does it take? And again, this is an impossible question. It's an unfair question, so I'm sorry about that. But it is Wednesday, and we're trying to figure out the crisis. I mean, a bank, who do they call? Do they just literally need to go through their books trying to understand the second, third round effects?
Yeah, exactly. I mean, that's probably for the widest spread of banks, that's going to be the big thing. But say for a UniCredit, if you're talking about, hey, how long would it take to get these things off our books? That is, as with all banking transactions, that would take a while.
Tom, thank you so much. Bloomberg's finance editor, Tom Metcalf, joining us this morning. Now, coming up, Prudential reports full-year earnings results as the insurer completes its repositioning to Asia and Africa. The chief executive, Mike Wells, joins us next. This is Bloomberg.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Paesi come l'Italia.
Italy should not worry about Russia's blackmailing on gas. Together with any CEO, Claudio Descalzi, we are building a new energy partnership to avoid further blackmailing from Russia on gas. If a country has the legitimate desire to join an international organization, another country won't stop the ambition just because it has more tanks. But if in Putin's mind reaching a peace agreement means that Ukraine accepts all of his demands, we are talking about a surrender. As my colleague Jean-Yves Le Drian said yesterday, surrender is not a solution.
Italy's Foreign Minister Luigi Di Maio speaking to me yesterday on the war in Ukraine and Russian oil. Now let's check in on the markets, and of course we're seeing a complete reversal. I don't know how long it lasts, and we're seeing quite a lot of volatility, but we're certainly looking at a reversal when you look at some of the U.S. futures. European stocks rising 5%. Now if you look at the banks, the ones that were slammed yesterday and the day before, gaining 5.7%. Again, there are dip buyers wagered by the global economic impact of escalating sanctions on Russia, which traders say is already reflected in market prices. There is also, I think, a hope out there in the markets that things are de-escalating, certainly in terms of diplomacy, with Mr. Zelensky, the president of Ukraine, saying that they no longer would want a NATO membership. So there's still hope, whether warranted or not, for a diplomatic and more peaceful solution, despite the heavy shelling we're seeing around Kyiv. Now, Prudential shares gaining as much as 8% today after the London-based insurer reported a 17% increase in full-year adjusted operating profit. Now, that's as the company completes its repositioning towards Asia and Africa. The outgoing chief executive, Mike Wells, notes that the conflict in Ukraine could impact market condition, but of course says Prudential's capital position is strong enough to hold up through volatility, also because it's not really focused on this region. Well, Mike Wells joins me here in the studio now. Mike, thank you so much for joining us. When you look at some of the conflict, and I think we need to start there, I know Prudential is very focused on Asia. It's very focused also on Africa as a smaller hub that could become bigger. But I guess the market turmoil, because of the second and third round effects, should not be underestimated in the market.
No, I mean, the events are obviously horrific, and I think they're, you know, as your opening comments, they're starting on creating volatility and political tensions globally. To your earlier point, we don't have exposure to, you know, Europe, let alone Russia and Ukraine. That's not where we do business. We do business now exclusively in Asia and Africa. So the secondary effects you see there are market volatility, potential, you know, further acceleration of inflation, those sorts of dynamics. But we're on the other side of the world of that you know, current crisis.
Yeah, is there anything that you worry about in terms of the markets freezing up? I mean, you lived through the 08 crisis.
Yeah, I did.
And so could we see anything similar there?
No,
actually, there's a big hedge fund position.
A lot better coordination with global, you know, the equivalent of central bankers. There's, you know, excellent dollar liquidity. For example, if you look at the Bank of England U.S. relationship, those are strong and historic. More cooperation with Asian key central bank figures, Hong Kong MAS and things. You know, I think that model is much more sophisticated than it was in 08. 08, it was relationship-based. I think this has now got good relationships, but also much more technical structure. So that doesn't mean you won't get volatility. Right. And I think it changes what people want to invest in, and it's a risk-off. As you see, you know, we've been a liquid. We're seeing that sometimes as a European stock, and we get hit by, you know, by volatility noise. But you know, in spite of a growing sales 8%, new business profits 13, and as you said, you know, operating income plus 16, and you know, it's. The risk-off piece, I think, is where you'll see the market go now, because that's the consumer sentiment, not just the trader sentiment.
And Mike, Prudential is now really an Asian-focused business, and actually it's really important for investors and people, you know, that watch us to realize that. What role will Africa play in this? At the moment, it's quite small. How much can it grow?
It is. So Africa is our future, right? So you know, the key when you're a CEO of a 170-plus-year-old institution, there's a bit of a stakeholder mindset to it. Can you make it better than you found it? And there's a responsibility to position things for, you know, future leadership. So, you know, I was when I joined Prudential. This is showing my age. Our Asia business was less than £3 million of earnings contribution, and it was categorized as other geographically.
Yeah.
And now you see the sort of numbers that it's producing. It's one of the largest businesses in the region, and it's grown very dramatically. Africa has got the same potential, but over a longer time frame. And the teams on there.
15 years?
I don't think it's that long. I think it'll go faster. Everything about our industry is accelerating faster. Consumer preference, regulatory, capital models. Technology has made learning faster. If you're a regulator, a consumer, a competitor, so I think that it's about the political development there, but it's a young continent, and it's got tremendous upside and tremendous need for there aren't governments that have retirement savings or health protection schemes at scale, and so that's what we do.
Mike, it's very clear that when you look at what's happening with Russia and Ukraine, so of course it's always loss of life that we think about,
Absolutely.
But there's also now become an economic war between the US, the UK, certain parts of Europe, and Russia. Do you worry that we're going to see some kind of geopolitical, concerns being transferred with China? And how do you prevent something happening if geopolitically China becomes more aggressive?
Yeah, I think the lens always with China that's important is what's in their long-term best interest. They're not a short, they don't tend to react short-term if you look at their history and certainly the history of the current leadership. So their moves, I think personally, not less than the corporate view, are always towards what's the greater benefit of China. The key for China now, you've seen they've produced lower GDP growth rate forecast, which is still in excess of 5%. And growth is going to be hard to find globally. Again, I think we're positioned in the markets that'll have it. But 5% is an excellent number for the size of their economy, but it's critical to the success of the economy. So I think that's first and foremost the lens for their government now. So, they're seeing what's happening to an isolationist, Russia now. And I don't think that's, if you're the smart political leadership and they have, very talented people, they're going to look at that and say, we don't need any of this noise. We don't need any of these challenges. They want to grow the economy, and you do that by being a part of the world economy, not separating yourselves.
Mike, you have a joint venture actually in China with CITIC.
We do.
Does it make sense taking it over completely?
So I've been public. I would have loved to have bought the whole thing. It's up 24% this year. It's grown almost 40% a year in both earnings and in its key metrics since I've been CEO. It's an incredibly successful business now, so they enjoy it too. Yeah. It has a footprint across all of Asia, all of China. It has 84 or 85% of China's economy, and it's got, and CITIC's been a great partner. So we'd love to have it. It's working very well as it is now, and they're a sophisticated partner in dealing with China, including the political questions you're asking. They're a great partner.
Mike, thank you so much, and I know you're off at the end of the month, so thank you. I know you're coy about what you're doing next, but I'm going to see you back on Bloomberg with the scoop.
Well, we'll see. In the meantime, you'll see me on holiday with my wife, Lindsay, but thank you very much for having me. Appreciate it.
Mike, thank you so much. Mike Wells there, the outgoing chief executive of Prudential. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The U.S. is banning imports of all Russian fossil fuels, including oil, in a major escalation of efforts to hobble Russia's economy. Washington's move will be matched in part by the UK, which is banning Russian oil but will continue to allow gas imports. Other European nations that rely more heavily on Russian fuels will not participate. Now, McDonald's is temporarily closing all of its 850 locations in Russia following criticism that it failed to act quickly after the invasion of Ukraine. The fast food chain says it will continue to pay its 62,000 employees. Heineken, Coca-Cola, PayPal, and the owner of KFC and Pizza Hut Yum brands are also suspending operations in the country. And OPEC Secretary General says there's no physical shortage of oil at present. Mohammed Barkindo told Bloomberg in an exclusive interview that futures markets are paper barrels, but in physical markets, supplies are indeed guaranteed. This says crude futures have risen more than 30% since Russia's invasion of Ukraine.
But I can tell you, as of this morning, there is no physical shortage of oil. But there's a very strong perception in the market because of the volume that is at stake.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. U.S. futures also on the way up. You can see similar gains for the NASDAQ that you're seeing some here in Europe. Now, these are the indices that were slammed the most. If you look at the NASDAQ futures, gaining some 1.9%. Now, oil, though, remaining firm a day after Joe Biden banned fossil fuel imports from Russia. If you look at treasuries, they're sliding, dollar weakening for the first time in 5 days. Haven demand waned. Unclear whether we're going to see a lot more volatility and whether some of these dip buyers now thinking that the sanctions on Russia are already reflected in the market prices, whether that will continue. Coming up, commodities continue their rally. We hear from the LME chief executive next. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
As the exchange, our fundamental responsibility is market stability. And had we allowed those trades to stand, had we allowed the price to continue to spike up, as you see on the graph there, it would have been extremely difficult for some of our market participants to continue their activities.
LME Chief Executive Matthew Chamberlain speaking earlier to our Anna Edwards on canceling nickel trading. Now joining us to talk about all of this is our Bloomberg Commodities reporter Jack Farchi, alongside our colleague Javier Blas. Both co-authored a book on paperback out this week, The World for Sale. It's a fantastic book which also goes through some of the trading, the ones that we never hear about. This nickel story, Jack, is insane. I mean, it's really throwing back the LME's darkest days. And you kind of think, I mean, it was such a huge position for, you know, this billionaire based in the Far East that you wonder whether there are more big trades like that.
I mean, I think what we're seeing here across commodity markets, you take out Russia, this huge exporter of almost every commodity from markets, and you get all kinds of unintended consequences. You know, it's not unusual for big commodity producers to have short positions in futures markets to hedge their production. When prices start to go up like this, they need to pay margin calls. What we saw here is suddenly people needed hundreds of millions, even billions of dollars of margin calls in a very short space of time. They couldn't get the cash in time, and the market goes, as you say, pretty nuts.
Jack, I mean, we're day 12, right, of the invasion. Are we going to see more cases like this that we just don't know? Are hedge funds, and I mean, or do we know about some of these margin calls, or do we need to wait for banks to go through them?
We have been seeing some of this already. Russia is, you know, it's pretty astonishing. Until 12 days ago, Russia was a very integrated part of international markets, particularly commodity markets. Big Russian commodity producers were big players on, not just as exporters, but also on international exchanges, trading futures, hedging with big positions with Western banks. A lot of that has been closed out in the last few weeks. Some of what we've seen in, for example, gas markets has been to do with Russian positions being closed out.
But, you know, we go back and we think about the embargo of 73, some of the things that happened in 78, but this feels different because it's touching oil, energy, metals. How much worse could it be?
I think it's very scary. I mean, sitting here as a commodity reporter, it's not something I've ever seen in my career, in my lifetime. It feels like we're heading for a crisis very much like the 1970s, but as you said, the 1970s was an oil crisis. Here we have an oil crisis, a gas crisis, a coal crisis, a wheat crisis, a metals crisis. It could be very serious.
Jack, thank you so much for joining us. Jack Farchi there with the very latest on metals. Now, coming up, we'll have plenty more Bloomberg Surveillance Early Edition. Anna Edwards talks you through everything that's happening with Matt Miller and Kaylee Lyons. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Historically, commodities have been very, very volatile.
The situation in Russia-Ukraine invasion is critical for raw materials.
We are not dependent on Russian oil, and we have tremendous opportunity to secure U.S. energy security.
We will not be part of subsidizing Putin's war.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Investors buy the dip in global stocks. The U.S. bans the import of Russian crude. Meanwhile, House Democrats unveil their own proposal to bar oil from Russia. Europe's on a wartime mission to ditch Russian fossil fuels. We'll discuss the impact in an exclusive interview with the Prime Minister of Greece. And more big names put their Russian operations on hold. Starbucks, McDonald's and Coke are among the latest to hit pause. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards in London. Matt Miller and Kaylee Lines join me from New York. And Kaylee, we see appetite for risk through the European session and looking ahead to the US futures picture as well, as investors seem to be taking this opportunity to ask what is already priced.
Yeah, and is this a dip that people want to buy? At least for the moment, Anna, it seems maybe that is the case today. That was not the case, though, in Asia overnight. It really was a mixed session. You did have the MSCI Asia Pacific Index in positive territory, but not by much. It was up by about 0.3%. And China and Hong Kong underperformed. At one point, benchmarks for both of those regions were down more than 3 percentage points. We recovered a lot of those losses, but still, though, the CSI 300 in China was down the better part of 1%. It's 6 down day in a row. The longest losing streak since March of 2020, now at its lowest since June of that year. Now, there's a couple things going on. On the one hand, you had the Norway Sovereign Wealth Fund excluding Li Ning, which is a Chinese sportswear maker, from its portfolio because of concerns around human rights in Xinjiang, a story that we have, of course, have talked a lot about. That took that stock down 9.4%. It raises concerns more broadly about institutional investors maybe pulling back from some Chinese companies that do business there. But then, of course, when we think about higher commodity prices, higher oil prices, how all of that feeds into inflation, it kind of feeds into this narrative that maybe it's not going to be so easy for policymakers in China to ease. And of course, those inflation fears leading to a global bond sell-off that did continue overnight once again, including in the belly of the curve in Australia. The 5-year yield there up the better part of 9 basis points at 2.03%, which is the highest in about 6 years, Matt.
Yeah, and we see a sell-off in U.S. bonds as well. Futures preparing us for a higher open right now, up 1.6% on S&P futures. The 10-year yield climbing back almost to 190. Right now, 189.75 as investors sell out that debt. So risk on atmosphere is pervasive. Oil coming down a little bit, back down to 120.30, so still a relatively high level. And this is, to me, one of the most exciting assets to be watching today. Tom Keene's BitDog finally gets up over 40 grand. $41,980. Bitcoin up 9% today. And you know, with the lack of volatility that we've seen over the past weeks and months, this actually looks like a big number now. The reason is that Treasury said, congratulations to the Biden administration on an executive order we've all been waiting for to provide some much-needed regulation to the crypto industry. The problem is, I think that was a slip-up by somebody at Treasury. They then deleted that message, and they don't want to be making any comments on it right now because we haven't seen any executive order quite yet. We're waiting for it, but it just hasn't hit the wires, Anna.
Yeah, really interesting. So the prospect of regulations, does that send Bitcoin up or down? Really interesting to watch that one then, Matt. This is what dip buying in the European space looks like right now. It's all green across the screen as investors ask, as we were saying earlier with Kaylee, you know, what is priced in? Have we priced in peak sanction perhaps here for the global economy? What do we look for next in terms of that narrative? This is where European equity markets are then now. Just to highlight a couple of them, the French market, the German market, both up by more than 4%, as is the Italian market. So real buying of risk assets today, and it's not just around equities. We see the euro is stronger, the pound is stronger, and we certainly saw the dollar weakness in keeping with that. Which sectors are being bought up? Well, banks are being bought up because they've been really beaten up, as is the case with travel and leisure as well. Just like during the pandemic, we saw that was a really beaten up space, and certainly it has been in the early part of this terrifying war in Europe. And as a result, we're seeing travel and leisure stocks rebound the most in today's session. This is the onshore ruble. The offshore ruble is a little bit weaker than this, of course, but we are seeing for the first opportunity for investors in Russia on the onshore side to actually get to trade in the ruble this week. And so we're seeing further weakness coming through in the Russian currency as a result of that. Brent crude actually down this morning here in Europe, so that makes a change. 124.92, so still at these historically elevated level, but a little bit of respite when it comes to the commodities space, Kaylee. So in terms of Brent crude, Goldman Sachs classifying the disruption we're seeing on the oil markets right now as one of the biggest periods of disruption in history, which is interesting to note. And also thinking about demand destruction, the high price of gas that we've seen recently coming off those highs today, but Citi saying that already that's going to result in a 5%, more than 5% pullback in terms of European demand this year as industries shut down and look for alternatives.
Yeah, it's no longer just a supply side story, Anna, so that's something we will continue to pay attention to. Now, as for what else we will be paying attention to in the day ahead, South Korean voters are going to the polls to elect a new president in a neck-and-neck election. We'll also get, speaking of commodities, the weekly EIA crude oil inventory report at 10:30 a.m. New York time, and we'll be getting CPI data from Russia at 11 a.m. New York time, Matt.
All right, we'll watch out for all of that, but of course the war in Ukraine is still front and center, and the U.S. and U.K. have announced a ban on Russian oil imports and a major escalation of Western efforts to hobble the country's economy. In an exclusive interview with Bloomberg's Anne-Marie Hordern, the former CEO of Yukos Oil said Western Europe's reliance on Russian oil and gas has been a huge mistake, and he discussed Putin's power play.
The regime will change, no doubt about it. Before, it might have taken 10 or 20 years from now, but now it may happen much faster.
All right, amazing get there, Khodorkovsky, who of course spent time in Siberian gulag for betraying Vladimir Putin. Let's get the latest with our reporters across the globe. From D.C., we are joined by Anne-Marie Hordern herself, our Washington correspondent. From Paris, we're joined by our European correspondent, Maria Tadeo, and we'll get the Polish-Ukrainian border reaction, the latest on the refugee crisis with Bloomberg's Tom McKenzie. And then we're going to get to the markets angle with Bloomberg's Danny Berger from London. Anne-Marie, we'll start with you from D.C. I don't understand why Congress needs to pass a separate measure to ban oil imports when President Biden did it already yesterday.
Well, Matt, it's a good question because we're not even sure if the House does pass this, but they're going to vote on it, and they likely will. What fate does it have in the Senate? Because as you say, there already is an executive order from the White House banning fossil fuel imports from Russia. There's also some other items in this bill, like barring Russia from the WTO and potentially bolstering the Magnitsky Act. So there are some other items, but already the talk of this legislation that was being drafted pushed the Biden administration's hand to come out and deliver that executive order. So the administration or the Congress still wants to go ahead with it. But again, we don't know the fate of it because it may pass in the House, but there's no telling tale that Senator Schumer is going to take it on the floor because he came out and he applauded what the administration did yesterday, which was banning those fossil fuels. We should also note, Matt, we got text very, very early this morning, the U.S. about to pass $1.5 trillion. They're going to vote on it.
It still is very early this morning.
Yes, it still is, but this was very, very early this morning. After midnight, our reporters were up incredibly late. One thing to note in this $1.5 trillion spending package, it'll keep the government open, but the Biden administration asks for $10 billion, given the invasion of Ukraine, to go to Ukraine in terms of military, economic spending, and the likes. And they're actually getting a little bit more than that. $13.6 billion is where Congress landed on.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Hordern for us in Washington. Let's get the EU response then with our European correspondent, Maria Tadeo, who is today with us from Paris because important meetings are going to be taking place there later today. And Maria, what are we expecting to hear then from European leaders gathering in Versailles, gathering in Paris, as they watch the US move forward with this ban on energy from Russia and the UK on some products? What is the European response going to be? They've got bold ambition, cutting back on gas reliance from Russia, but so far no ban.
Yeah, no ban. And Anna, I was told and reminded by a Brussels official, and we can debate and discuss about this, but what they say is for every dollar the United States loses on the sanctions, the European Union could lose 10. And it's unrealistic to expect countries like Germany to switch from one day to another into a completely different energy system. So yes, energy will be on the conversation. Yes, the optics around Europe not joining in this ban look bad. And of course, the price is going up. So to some extent, you could argue the damage is already being done. The other thing, of course, that will dominate the conversation is the future of Ukraine. Excuse me. Remember, the country had applied for EU membership, and European leaders will debate this. Now, membership to become a member of the EU does not happen overnight, and I should make it very clear, it does not make you a NATO member. The other thing that I would point that's really essentially the big story that's a focus now in Europe today are some lines that are coming out from Russia, in which the Russian spokesperson for the Kremlin says Russia does not intend on toppling the Ukrainian government, and we do not plan occupation. We would prefer to deal with this diplomatically. So again, this is really where the focus is now in Europe. It's perhaps the softening in the language from the Russians in a war that's now extending into day 14th, and it's becoming much longer than Russia expected, and de facto more expensive than Russia expected.
Yeah, so an interesting change of tone from Russia as they maybe change their playbook from what they thought that how this was going to go at the beginning. Thank you so much to our European correspondent, Maria Tadeo. And of course, you can read more on what the EU is doing by reading our big take on how Europe's leaders are making the shift away from Russia's fossil fuels. But now we want to get to the latest on the refugee crisis and what is happening on the border with Poland and Ukraine. Bloomberg's Tom McKenzie is there for us. Tom, what is the latest from on the ground?
Kelly, this is where you really see at least a small slice of the human suffering, the human toll of this conflict. I am on the border, one of the border crossings. Hundreds of people continue to cross. We've seen that. And the vast majority are women and children because, of course, the men have to stay back in Ukraine and fight. Very young children. It's freezing temperatures here. So they cross the border after waiting for hours, sometimes days. On the other side of the border, they get to Poland, where we are now. Just hundreds of meters away is the Ukrainian border. Then they're put up in tents and processed. There's hot food, there are volunteers, but it's grueling conditions. The United Nations coordinator who was overseeing much of the logistics here says that his real concern, he told me this last night, is what's happening on the Ukrainian side of the border, where many people are having to spend the night. Again, it's -2, it's freezing, it's snowing. I met one mother with a 2-month-old baby. She had to spend the night overnight waiting to cross this border. She had another child with her, her husband staying behind in Ukraine to fight.
Yeah, what kind of welcome are these refugees getting? I mean, are there international aid organizations there? Are the Polish people showing up to help out? What kind of embrace are they receiving?
Yeah, so Matt, we talk a lot about the coordination, cooperation that we see at the national level in Europe, and indeed between the Europeans and the US and their allies. And that's actually reflected on the ground here. I met a group of guys who come over from New Jersey, all the way from the States. There's people from the UK, France, Germany, Belgium, and of course the Poles themselves really stepping up to try and do their bit. There are dozens, if not hundreds of volunteers here on the ground supplying food, supplying clothing, tenting, and trying to give the Ukrainian refugees a welcome and trying to help with that logistical process of getting them then beyond this border and to their next destination, wherever that is. And on the national level, the Polish government stepping up with additional funding, about $1.7 billion, to ensure that their economy can sustain this influx of refugees. More than 1.2 million refugees from Ukraine into Poland, just into Poland, and that's just in 12 days. That is the largest refugee crisis that we're seeing in Europe since World War II. Total numbers of 2 million. The UN coordinator, by the way, yesterday says he thinks that could get to 4 million just in the next 2 weeks.
Tom, thank you very much. Bloomberg's Tom McKenzie reporting from the Polish-Ukrainian border. Let's get back to the market conversation. Nickel prices shot up as much as 250% in 2 days on the London Metal Exchange at the start of this week, prompting the exchange to suspend nickel trading and cancel some of those earlier trades. Earlier today, the LME CEO, Matthew Chamberlain, told us that was the right decision.
As the exchange, our fundamental responsibility is market stability. And had we allowed those trades to stand, had we allowed the price to continue to spike up, as you see on the graph there, it would have been extremely difficult for some of our market participants to continue their activities.
Let's get more with Bloomberg's Danny Berger. So no trade in nickel to talk about, Danny, but still the aftermath of what we saw in nickel prices runs through a lot of conversations, I imagine, here in London this morning.
It does. Look, there's been a lot of criticism on the LME's decision. They're the exchange of last resort. So what does it mean if they not only suspend trading, but essentially cancel an entire day's worth of trading? Of course, the LME isn't the only place nickel trades. It also trades on the Shanghai exchange as well. And that, too, saw some extreme levels of volatility. For our radio listening audience, I have a chart in front of me that shows both. And you see this huge spike up in LME nickel futures, which doesn't include yesterday's price spike because, again, those trades were canceled. Shanghai is less because, unlike the LME, they have a cap on how high nickel could go. And we got to that level today. So trading stopped after reaching that level. Now, we continue to also hear about the fallout, mostly for Chinese miners of those who had nickel shorts. Just moments ago, Huayu Cobalt announced that they're facing losses. And Bloomberg also learning more details about Shenzhen, the nickel giant in China. Now, according to people familiar, they've secured a loan because they have billions in losses. That loan will help them pay down some of the margin call that they face from the LME. Now, they're also going to be reviewing their hedging strategy because, of course, they had this huge bet on nickel that caused these losses during the short squeeze. The owner there, according to people familiar, saying that they might get rid of that position altogether.
Amazing to be, at the same time as you're the largest producer of nickel in China, you're also shorting 100,000 tons of it on the LME. Let's get to Jeff Gundlach, Danny, because he always makes some big predictions, some big forecasts, and he's looking at inflation that he thinks could top 10%.
Yeah, this was on his annual webcast. 10% he does say is where we'll get to the end of the year at the maximum. His prediction was more like 7.25%, but obviously that's still massive. And he did not mince words. On the Fed, he said their job is to fight inflation. They've done a terrible job so far. He said their end goal, 2%, that's laughable. We're going to be way beyond that. So is the Fed going to have to target 1%, even lower, to get us back to an average of 2%? This is the worry, that the Fed is going to have to be so aggressive to fight inflation at a time where there's concerns about growth. Are they going to break something? This is something the 2-10 yield curve has started to show, just a measly 23 basis points between the two. And Gundlach pointed to this as well, saying that it looks like we're heading to inversion, and if we are, it is likely a recession is next to follow, Kaylee.
Yeah, not a great signal. Thank you so much to Bloomberg's Danny Berger. So let's now go from the macro picture to some corporate stories, because the list of the U.S. and European companies pulling out of Russia is getting longer. Just minutes ago, Imperial Brands announced that as of today, the tobacco giant has suspended all operations in the country. This after yesterday, Coca-Cola, McDonald's, Starbucks, and PayPal announced they too will be suspending operations in Russia following its invasion of Ukraine. So let's take a look at how those companies are performing in pre-market trading at the moment here in the U.S. All of them are actually moving to the upside after making this announcement. You have Coca-Cola up 1.6%, PayPal is up by 3.5%, Starbucks by 2.4%, McDonald's also moving to the upside by about 1.6%. And of course, we are seeing a broader rebound in the markets. Futures are higher, Anna, so in part that's probably what has to do with this, but also maybe some relief because a lot of investors were waiting to see when these companies might be making a move like this.
Yeah, absolutely. Better to know than not know, perhaps, is the market's conclusion. We will talk markets with Sandra Holdsworth, head of rates at Aegon Asset Management. She'll be joining us shortly. Plus, coming up, how the war in Ukraine is disrupting supply chains for the global auto industry. We'll talk to the Continental CEO. Plus, Greece's plan to save Europe's gas market. Don't miss our exclusive interview with Kyriakos Mitsotakis, the Greek Prime Minister. This is Bloomberg.
primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. Now, I am looking at record highs for U.S. break-evens with 2 years at 4.5%. We just heard Jeff Gundlach say that he expects inflation to end the year at 7.5%, could get as high as more than 10. All this as commodities just soar in an amazing amount of volatility. Sandra Holdsworth joins us, head of rates at Aegon Asset Management. Sandra, what do you take from the incredible rise we've seen in oil, in gas, even leaving nickel aside? Does this drive inflation up to double digits?
Well, double digits is certainly a good headline, eye-catching number, but it's certainly driving it in that direction. Whether we actually reach the 10% or not remains to be seen, but inflation forecasting has certainly been a really difficult thing over the last 6 months, and it just got a lot more difficult in the last 2 weeks. So, as you said, we're seeing record increases in commodities across the whole spectrum, from energy to food to metals, etc. And this comes on top of a supply shock that we've had for the last 2 years through the pandemic. So this is a very difficult problem, and for the moment there's no sign of inflation coming down. So those break-evens are, surely reflecting that.
Sandra, good morning to you. Yes, it wasn't very long ago that we were talking about transitory inflation. We were talking about inflation maybe peaking around the spring of this year. I'm talking globally, but also specifically in the United States, I suppose. How do you think the Fed is going to balance the competing concerns around inflation and around global growth now and demand destruction given high commodity prices? How do those things come together to create Fed policy in March?
Yeah, well, it's a very difficult problem because, obviously with the rise in commodity prices, that will lead to some curtailment of consumption and changes of behavior. But in general, what we have is a global economy where global demand is really quite strong still. And we're having these price rises, and companies will probably try and pass it on. So the Fed's in an extremely difficult position. On the one hand, they have very high inflation that they really are beginning to look a bit sort of behind the curve on.
Yeah.
But on the other hand, they don't know how much growth is going to be curtailed by it all.
Well, Sandra,
and that's their balance. So, I mean, I think they'll proceed fairly cautiously.
And Sandra,
whether that's right or
this
wrong.
is Kaylee in New York. If I could just jump in here, apologies. We also have already seen financial conditions tightening. How much work has the market already done for the Fed?
That's, again, really difficult to say. I mean, I think, you know, you're coming from the position where the Fed and the other central banks were in a position of extreme monetary accommodation. So they will still want to move, despite the tightening in financial conditions. They will want to go back to at least where they think is a neutral level of monetary policy. But all the time keeping an eye on what financial markets are doing.
All right, Sandra Holdsworth of Aegon Asset Management, thank you so much for joining us. Now let's keep you up to date with news from around the world with the first word. Starting with the oil industry, executives are meeting with the Biden administration officials this week. Rising oil prices and national security concerns are bringing together two groups that have had a distant relationship since President Biden's inauguration. The oil industry says it needs a more supportive energy policy if it's going to commit the money needed to grow production. Economists are questioning China's ambitious economic growth target just days after it was announced. They point out that the country faces a spike in oil prices, a spread in the coronavirus, and continuing problems for property developers. Goldman Sachs estimates China's economy will grow just 4.5% this year, a full percentage point below Beijing's targets. And Bitcoin rose almost 10% today to go over 42,000. That came in the midst of a sharp rally in digital tokens. The industry is awaiting further detail on a U.S. executive order, which is expected to outline the government strategy for cryptocurrencies. And of course, the Treasury may be too early released a statement on that, Anna, so we'll look for any firm news later on today or perhaps throughout the week.
Yeah, we got a glimpse of possibly what is to come. When we come back, we were hearing about inflation pressures, about pricing power, and the extent to which companies are able to pass on higher costs. What that means for inflation. We'll talk to the Continental CEO, Nikolai Setzer, joins us. Really interesting conversation. This supplier to the auto industry. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modelizaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The price of oil dipped today, a day after President Biden said the U.S. would ban the import of Russian crude. Still, oil futures in New York have soared about 35% since the invasion of Ukraine almost 2 weeks ago. Banks and traders are predicting that oil prices will go even higher. Europe's on a wartime mission to ditch Russian fossil fuels. The continent's decades-long timelines for overhauling energy supply systems are now being revved up under extraordinary duress. You can read all about it in today's Big Take, and we'll also discuss the impact of that in our exclusive interview with the Prime Minister of Greece. That's coming up shortly. And Heineken and Imperial Brands join a growing list of companies that have quit doing business in Russia. This comes a day after McDonald's, Coca-Cola and Starbucks announced they were temporarily halting operations in the country. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Matt, the list of companies not wanting to do business either because of humanitarian concerns or indeed because it's just getting really difficult to do business in Russia, it gets longer and longer. What are you watching ahead of the US Open?
I'm really watching the moves in markets. And of course, there's been some amazing volatility, but I was so impressed to wake up and see the DAX was up 4%. Of course, yesterday at this time, it was down 4%. Right now, we're looking at S&P futures. They're gaining 1.75%, so a very risk-on mood here this morning. Investors are willing to let go of the perceived safety of treasuries. As a result, they're up 6 basis points to 190.44. And investors are even selling out of New York crude positions, although we're still at 121.37. It's still an eye-poppingly high number, but we're down 2%. Also, speaking of eye-popping, Bitcoin up more than 9%. This is, I think, one of the most interesting stories, or at least, you know, when you wake up and you need to experience a little bit of schadenfreude that someone else besides you made a mistake. Somebody at Treasury leaked a statement congratulating the Biden administration on its executive order in crypto. Of course, we've all been waiting for more cryptocurrency regulation. The industry needs it. Prices will go higher when we get it. But there hasn't been an executive order yet, and Treasury deleted that from their website. They now have declined to comment on it, but we're expecting something, and as a result, Bitcoin is up over $42,000. Kaylee, what do you see in the pre-market?
Yeah, Matt, it's almost like ruining someone's surprise birthday party in a sense. So we'll definitely look and see if we actually get firm confirmation of that executive order and then a firm statement out of Treasury on it. But with that move higher we're seeing in Bitcoin as a result of all of that, you're seeing a subsequent move in crypto-related equities in pre-market trading. Coinbase is up the better part of 7%. And as for some other groups of stocks that are moving higher, broadly the financials are catching a bid as we see that move upward in yields helps them out on the net interest income front. JP Morgan is up a little more than 2%. You're also seeing a continued rebound in travel stocks. That includes the airlines and the cruise lines as well. Carnival is up more than 7 percentage points. And then as Anna was saying, we are seeing more and more companies joining the list of those pulling out of Russia. PayPal, one of the companies along with Coca-Cola, Starbucks, McDonald's yesterday announcing the suspension of their operations there. And PayPal moving to the upside on the back of that, up about 3.5% before the bell, Anna.
Yeah, and we heard about Heineken and Imperial Brands just a little bit earlier on in this the European morning, Kaylee. So the European angle on all of these stories, yes, we're seeing a risk-on mood here in Europe, that is for sure. We have moves to the upside on the stock 600 of 3.4%. Matt was accusing me earlier in this week of being a little too obsessed with the negatives around the European banking story. Well, just to prove I can obsess around the positives as well, we see a bounce in that sector up around 5.8% this morning. As Kaylee said, travel stocks moving higher in the pre-market in the US, and travel and leisure stocks also moving higher here in the European session as well. We are seeing a little bit of respite on some of the almost what seemed to have been relentless rally in commodities. We seem to talk about it day in, day out in connection with the war, but even before that, of course, Brent crude 126.12, so just as we're seeing in WTI, a little bit of a pullback from recent highs. Are we starting to price in peak sanction? Is that why markets are able to take this view this morning? And natural gas, we haven't seen Europe coming forward in one voice saying it wants to sanction Russian gas at all. They're not sanctioning energy products from Russia, it seems, even though there is this aspiration, Matt, to cut back on consumption. But certainly we're seeing a little bit of room for some of these energy products to move to the downside in today's
the concern there being that you're funding, as you purchase those products, Vladimir Putin's invasion of Ukraine. It's something you don't want to be doing at any price. Now, we've been talking a lot about companies that have been pulling out of Russia, a growing number cutting ties after that invasion. Continental said this week it will cease operations at a plant making tires in Russia's Kaluga that employs some 1,300 workers. The CEO of Continental, Nikolai Setzer, joins us now for more on the company's outlook, as well as Russia's war in Ukraine, the risks there. Nikolai, I want to start on that note. Thank you very much for joining us. How important is Russia? How important is Ukraine to the automotive supply chain? And how big are these risks?
I mean, first of all, how big are the risks? We have published our outlook today under the disclaimer that all the consequences of this geopolitical situation are not priced in, so to say, because it's impossible to quantify them. What we see, of course, is that vehicle manufacturers, they source as well out of those regions, specific components such as wire harnesses, it was reported as well, which has an impact on their vehicle production in Europe. That's on the one hand. The other part, obviously, several raw materials, energy is coming out of that region, which affects our customers, but as well as our production.
How about the energy usage? I mean, are you using Russian oil or gas in your production? And if you were, wouldn't you want to stop that as a funding source for this war?
I mean, we immediately have started task force teams which are working exactly on those questions, how to ensure the energy supply of our plants, which alternative products, which we can use alternative sourcings in order to keep that running in case there should be a disruption or reduced supply. This is exactly what we are doing as we are talking, and again, too early to quantify any consequences out of that.
What kind of sources would you be looking at? Good morning to you, Nikolai. What kind of sources would you be looking at to replace any energy supplies that are either disrupted or become politically unpalatable? Can you give us any details of where the alternative sources might be?
I mean, the alternative sources in the energy sector, such as alternative oil, alternative gas, or even coal, which might be procured then. That is the energy part. On the other part, we are talking raw materials. And, you know, on the rubber side, we have in particular the petrochemical parts, synthetic rubber, and all those materials which are sourced. They have to be sourced out of different regions and out of different areas. That's where the teams are on, all hands on deck, and they are working on mitigating all impacts.
And Nikolai, sticking with the financials, you clearly have been facing higher input costs even before the war started, and now things become very unpredictable on that front, I'm sure. What kind of pricing power then do you see in your end markets, your ability to offset those higher costs by charging your customers more?
I mean, we saw raw materials costs already raising last year. I mean, not only on the energy part as well, the semiconductor, all input costs are on its way up. For this year, we are guiding for 2.3 billion euro additional costs on automotive and as well on the rubber side. So very obviously, we are working hard in order to reduce that cost pressure on the one hand. On the other hand, we are in partnership discussions with our customers in order to have a fair contribution as well. Product by product, that is very individual if you are talking B2C products as well as B2B or business with the automotive industry. So there is no one-size-fits-all answer to that question.
But how much more room do you think you may have to pass on those costs, to raise prices to the end consumer before it results in demand destruction?
I mean, to the second part, how the demand will continue in this current environment with all those dynamics and changes, nobody is able to predict. What we can see is that the input costs are rising. They are getting into our P&L, and we have to manage it. We have to manage it on the one hand in order to mitigate costs and working on our cost part. However, there's no way that with 2.3 billion additional costs, we are able to carry all those. So we have to go in those discussions and find solutions.
Nikolai, investors, I mean, consumers love your tires, obviously, and investors, I think, look at you as a tire maker, but you have, of course, the high-tech, quantitative business. Are investors valuing that business as well as you think they should, or are you planning to, make any moves that would unlock the valuation there?
I mean, we've worked on our strategy on the automotive side, on the tech side, as you mentioned, as well as on the rubber and the corporate part in the last year very intensively. We have announced in September a new structure for automotive with strong 6 action fields, technology action fields working together and leveraging those organizations on the one hand. On the other hand, we have now a structure of 3 strong sectors: the automotive business, the tire, and the quantitech, so the technical rubber business. So at those 3 under one roof, we are sure that we create with this combination strong momentum and more momentum, which we would create by having individual units.
Thank you very much, Nikolai. We appreciate it. Continental CEO Nikolai Setzer joining us there to talk about how the business is coping with the uncertainty, the changes to the business that it has made as a result of the war in Ukraine. Coming up on this program, Greece's plan to save Europe's gas market. We will get the views in an exclusive interview with the Prime Minister of Greece, Kyriakos Mitsotakis, who joins us next. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
There just isn't enough LNG in the world. Every LNG facility has been running flat out since the fall of 2020 when prices recovered after the pandemic. I would imagine for the short term, and it's not good for our environment, for the short term, I think their only choice is burning coal just to get through next winter.
That was the Freeport LNG CEO Michael Smith speaking to us on the sidelines of the CERAWeek conference in Houston, Texas. Very timely gathering, of course, of oil executives in the United States. Let's get more on the war on Ukraine, the war in Ukraine, and the political response that we're seeing here in Europe. How far should it go? I'm very pleased to bring into the conversation the Prime Minister of Greece, Kyriakos Mitsotakis, who's with us, and our colleague Francine Lacroix will be kicking off this conversation from here in our studio in London. Francine.
Francine.
Anna, it's all about energy prices. And actually, if you're a world leader, if you're the Prime Minister of Greece, of course, you want to try and temper the impact this has on your population, which is why Prime Minister Mitsotakis joining us now put this very clear 6-point plan addressed to the Commission, Prime Minister, where you lay out, first of all, a cap on that title transfer facility, a fluctuation on the band so that it doesn't go too up, too down, stress related on how you, for example, fix price. But the main question, Prime Minister, we have those 6 points. They're clear. The main question is who pays for it. So Europe would still have to go on the main market. So in competing, for example, with your, on the global market. So you're competing with Asia, but also China for LNG. Who will foot that bill?
Well, first of all, Francine, let me quickly run you through the reasoning behind this proposal. I am a center-right politician, a believer in well-functioning free markets. The real question is whether the wholesale gas market currently is properly functioning or whether it no longer reflects the fundamentals of supply and demand. If you just, put up the chart regarding the fluctuations in what has happened in the TTF index over the past weeks, I think it is very obvious that this is no longer a properly functioning market. So if that indeed is the case, that begs the question whether we should make a more drastic intervention to essentially reset the market, rebalance it, and make sure that we avoid excessive fluctuations, which essentially have nothing to do with the fundamentals of supply and demand. And this is at the essence of what I'm proposing to the Commission. I understand this is a bold proposal, but at least it places the essence of the dilemma squarely, within the Council that will discuss this issue tomorrow.
Yeah. Prime Minister, should the EU then actually use funds from its emergency fundraising bond program to bridge this gap?
It would have the capacity to do so if it so chooses. Again, we should not forget that when we put together the Recovery and Resilience Fund, the Next Generation EU after the pandemic, there were many European leaders who thought that this was completely inconceivable even a few months before it actually happened. So we are facing a very extreme situation. If you just look at the impact that these price increases have on electricity bills, not just in Greece, but in many European countries, you understand the pressure we are placing on our citizens. And of course, we do subsidize electricity bills. All European countries do so. But I believe that we need a more systematic intervention. I mean, there are other ideas that have been tabled, for example, by Spain, regarding the way the actual electricity market is functioning. So what I am advocating is a European-wide solution to what is essentially a European problem.
Yeah, and again, they're bold proposals. The specific proposals, though, can help at the margin. But again, it could actually hurt liquidity out there because the real problem is that there's just not enough gas. So how does Europe deal with that?
Well, the gas supplies haven't fundamentally changed, which begs the question, why have we seen these very, very dramatic increases in the price of gas if the supply of gas has more or less stayed steady? That is why I'm arguing that here we have a fundamental problem of a market that is not properly functioning. Obviously, in the medium and in the long term, the Commission has put forward a very bold plan regarding Europe moving faster away from natural gas. But this, again, is a process that cannot take place from one day to the next. So what I am advocating is a short-term intervention in the pricing structure of the wholesale gas market. And of course, we will discuss how quickly we can move forward in terms of decarbonization, in terms of renewables, in terms of the Fit for 55 agenda. We have already taken our decisions, but moving away from gas at a very fast pace, of course, requires more time than we currently have at our disposal.
Right. Prime Minister, good morning. It was that I wanted to ask you about. Does Europe have the bandwidth to do this 6-point plan, which is about a short-term solution, I suppose, to a much longer-term problem, which is exposure to Russian gas supplies? Does Europe have the bandwidth to do that and at the same time do the important work of trying to diversify energy sources? Could this just be a distraction from the longer-term project?
No, I don't think it is a distraction, because I think we need to do both at the same time. Again, what I'm advocating is a short-term solution to what is a problem that has appeared in a very, very acute manner over the past months, not reflecting the fundamentals of supply and demand. At the same time, It is clear within Europe that we need to move away in terms of our reliance on Russian gas as quickly as possible. Again, this is not going to happen from one day to the next. And we already have, I would argue, a relatively robust plan in terms of our Fit for 55 agenda of how to decrease over time our dependence on fossil fuels. So what I'm arguing is that we need to look at both the medium and the long term, but also the short-term disruption is so massive and is imposing such a big burden on our consumers, but also on our businesses, that it will no longer be manageable at the level of the national budgets.
Are you, clearly there are many views in Europe about whether energy from Russia should be banned at this time, following what has happened in the United States and to some limited degree in the UK as well. Prime Minister, is Greece one of the countries that wants to see a ban on Russian energy imports into Europe, and over what timescale?
I do not think that an immediate ban of Russian imports of natural gas is a realistic proposition at present.
Do you think that Moscow will stop shipments first so that we don't even need to think about banning, Prime Minister, because they will get there first and stop selling to Europe?
Now, I don't know if that were to happen. We, of course, need to be ready for that eventuality. For example, Greece is importing a little bit more than 2 BCMs of Russian gas. We have contingency plans. We have LNG facilities. We're significantly investing in terms of upgrading our FSRU capabilities in order to import more liquefied natural gas over the medium term. So we have contingency plans. This is a worst case scenario, obviously, what you are describing. We need to be ready for every eventuality. But you asked me if I believe that we can unilaterally as Europe move away from Russian gas from one moment to the next. And my answer is that this is probably not a realistic proposition.
Prime Minister, thank you very much for your time. We appreciate it. The Greek Prime Minister, Kyriakos Mitsotakis, talking to us here on Bloomberg TV. And just as we were speaking there, the Russian government to draft a list of banned imports and exports today. We will watch with interest to see which sectors are on that. And thank you also, of course, to my colleague Francine Lacroix for bringing us that conversation. Kayleigh.
Anna, we also have some breaking news out of South Korea. Exit polls indicating that Yoon Suk-yeol is leading the presidential election with 48.4% of the vote, while the other candidate, Lee, has 47.8%, according to this joint TV exit poll. Yoon, of course, is the candidate from the Conservative People Power Party. He's more hawkish on Ukraine, North Korea, China, favors closer ties with the U.S. So again, Yoon Suk-yeol is leading the South Korea presidential election, according to exit polls. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. And also joining us, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, S&P futures are up, NASDAQ futures up, but you are watching the Dow.
Well, I'm watching the Dow, and this is an S&P chart that goes back to Roger Ibbotson. I thought we'd take a perspective here over the decades, Kaylee, with all the news flow and the exhaustion of this war in Ukraine. This is the acclaimed Ibbotson chart, but I framed it against the Dow Jones Industrial Average, which has its own foibles, with a depression in the lower left corner. And then the little red circle is a point of import. It is the Guadalcanal low. We don't have the time here to go into it, but this is really the bottom of World War II, and some would say the beginning of the ascent of modern capitalism. It's amazing to put in perspective the number of good years we've had recently, Kaylee, with a little bit of a rollover in this very painful moment we're in.
Yeah, absolutely, really painful. And the painful facts on the ground still really evident, Tom. And it's a bit of a conundrum as to why we seem to be in such a good mood for risk assets in today's session here in Europe. People asking themselves what's already priced, I suppose.
Oh, this is what the markets do, and it's a healthy part. And if you look at any war, you could really go back to Napoleonic War. Think of the Patrick O'Brien novels and all. Life goes on, and corporations adapt and adjust as they do domestically and internationally. And certainly we're going to see that in the coming days. One thing, of course, they're going to adapt to appears to be an embedded inflation.
Tom, thanks so much. Tom Keene, sure. Co-anchor of Bloomberg Surveillance, of course, back with the team shortly. More Bloomberg Surveillance is ahead with Tom Keene and the rest of the team. We'll be hearing from PIMCO co-founder Bill Gross and World Bank President David Malpass. Those conversations certainly worth tuning in for. Meanwhile, European equity markets moving to the upside this morning, up by 3.2% on the Stoxx 600. US futures higher. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Situation in Russia-Ukrainian invasion is critical for raw materials.
It's adding fuel to an already well-kindled inflation fire.
The longer it goes on, obviously, the larger the ramifications are.
That is putting all of us in a bit of a bind, but it's really putting the Fed into a bind.
They absolutely, positively have to get off the zero bound.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up 1.5% on the S&P. TK, a big conversation about peak sanctions. We've got to wait for the reaction from Russia, haven't we?
Well, we're getting the reaction somewhat today. The headline in the last 20 minutes, John, that really gets my attention is the Russians go to the issue, which is employing people. This is something, John, we really haven't talked about. It's not the inflation report tomorrow. It's out to a jobs report in America of early April, this is about jobs in Europe, in America, in Russia.
Well, here's the headline from the Russians just moments ago, Tom. Russia may rethink energy commitments after sanctions. What do you make of that?
I think they're going to come back, and because we're going to have to see what the news flow is. Very quiet yesterday, a little bit more news today. A ruble out at 137. I'm going to call that elevated, but not a breakout. The tape is really complex here. We're going to have to go through it, through all of surveillance this morning.
We had a headline yesterday evening, Lisa, from Russia. They said they will restrict trade in some goods and raw materials. The list we have not got yet. It's the Russian response now that I think we've got to pay attention to.
I mean, it did a little bit feel like if you aren't going to let me into your club, then I guess I refuse to be in your club, because right now they're basically being banned by everyone. But there is this feeling that uranium is really the key element that people are looking for. And of course, for Europe, natural gas, still a big question because they cannot eliminate their reliance so quickly, John.
So futures are up this morning, Lisa. There's this big conversation about maybe Russia backing down. I'm going to read the quote that we got from the spokeswoman for the foreign ministry in Russia, according to Interfax. Russia still call this a special operation. They go on to say what their goals are. There is no goal to, quote, occupy Ukraine, destroy its statehood, nor to topple its leadership. That's the communication we had from them earlier this morning.
Which directly contradicts some of the rhetoric that we heard at the initial outset of this conflict. Ultimately, what do we glean from the reliability of any of these statements when there's one person running the show, and it is Vladimir Putin, and it is unclear what his ultimate goals are and how much this is being driven by something personal and deeply rooted that really predates this entire era?
I'd add also the individuals making these statements this morning are also the same people who said there were no plans to invade Ukraine, and here we are.
There you go.
Futures up 1.5% on the S&P. Let's whip through it for you. On the NASDAQ, we're up by 1.9%. Look at this in the bond market. 10-year Treasury yields up by 5 basis points to 190. And twos, Tom, 2-year yields at the highs of the year going into CPI tomorrow, 166.
In the opening of the show, what Claudia Sahm there said, and that was quite an interview yesterday, John, but what the economist Claudia Sahm said yesterday, which is how long can a central bank stay at the zero bound? And you really begin to frame out here, not the 25 basis point move, but how do we get to 50 fast, elegantly over 60 days, whatever, 90 days. But the 2-year yield is leading the way. The market's doing the work of the Fed.
Lisa, crude, 121, down 2%. 2% on the day.
What do you do if you are a Federal Reserve hiking into weakness? And Jeff Gundlach, of course, of Double Line Capital overnight saying that he expects inflation to rise up to 10%, says the Fed is dramatically behind the curve. And yet, what do they do if you have an economy that could potentially be really hampered by these high commodity prices? At 10 a.m., we get a sense of just how overheated the labor market is. This is Jay Powell's own words of the Fed, basically coming out and pointing to this very data. Nearly 11 million job openings in the United States. We get the latest reading at 10 a.m. today. How much are we looking at a market with an implied jobless rate of about 0%? A fully employed America at a time when we already have big inflation and the prospect for much more down the line. Today, I'm really watching this. The EIA crude oil inventory report at 10 a.m. We're looking at crude still near the highs going back to 2008, although off the highs today a little bit, as well as the USDA World Agricultural Supply and Demand report at noon. Arguably, I'm more interested in that. What is the supply response? What is the planting response? What is the constraint here in feeding the world at a time when commodity prices are rising to record highs? Wheat has been the focus, but soybean oil climbing some of the highest levels on record at a time when that is one of the main vegetable oils used. And at 1 p.m., U.S. is planning to sell $34 billion of 10-year notes. Again, interesting to note that the 10-year yield has not risen to those highs that we have seen, like the 2-year. It is rising, still, though, below some of the year-to-date highs. And if you look at the real yields, and I know that, Tom, you look at this, negative real yields really are weighing on what people's sentiment is for the longer-term prospect. Yes, we are looking at higher 10-year yields in nominal terms. On a real yield basis, we are still looking at near the lowest levels on record at more than negative 1% or lower than negative 1%, John. What does that tell us about the long-term perspective for this economy?
What happened to the bounce? The start of the year, the story is completely unwound. Lisa, thank you. Just getting some news, Tom, from the President of the United States, some reporting from our team, that we will have an executive order later today from the President on planning to order government agencies to take a closer look at issues surrounding crypto, from developing a potential digital dollar to combating illicit finance. We understand, Tom, the agencies will have from 60 to 180 days to complete their reports.
We report that Janet Yellen and her team at Treasury, John, last night put out a statement on this, and then it was taken off the Treasury website. To me, that's way more important. There's a battle going on here between crypto forward at the U.S. government and crypto, wait a minute, what is this stuff used for? Those are the two sides of the argument. And of course, the president, like any other president, has to straddle that debate.
Well, certainly, Lisa, the situation of the moment has brought that debate into sharper focus.
Yeah, especially as you hear some oligarchs potentially using cryptocurrency to exit some of the money that they have currently in Russia, John.
42K, up almost 10% on Bitcoin this morning.
Nice quote there, Vera.
Thank you, Tom.
This is good.
Our team coverage
once a month, whether we need it
starts
or not.
right now. Bloomberg's Anne-Marie Hordern in Washington, Maria Tadeo in Brussels. Anne-Marie, let's start with the president banning imports of Russian energy, and then a report from the Wall Street Journal that he can't get a call organized with leaders in the Middle East. What is that about?
Well, this is reporting just right now strictly for the Wall Street Journal, but what they are saying is that you have Mohammed bin Salman of Saudi Arabia and the ruler as well of the UAE basically shunning organizational calls to try to set up a call between the White House and these two individuals. Of course, this comes at a time that the United States is really desperate to get these two countries, the Kingdom of Saudi Arabia and the UAE, to start pumping more oil because they are taking more Russian crude out of the market. Whether or not the U.S. ban those imports, right, a lot of that will just go to China is what everyone's telling me. But there is going to be disruptions in this market because whether or not it goes to China depends on if a ship is willing to go pick it up and bring it to China. So that's the first thing. And then I would note just in the energy market this morning, you have Dmitry Peskov, who's a longtime spokesperson for President Putin, saying Russia may rethink energy commitments after sanctions. This would be an incredibly difficult position for Europe.
I would suggest, Maria Tadeo, right now, Peskov doesn't matter. People want to hear from Putin. What do the leaders of Europe want to hear from Mr. Putin right now?
Well, Tom, they probably don't want to hear anything. What they want to see is real action, and they want to see a ceasefire, and they want to see troops, of course, being pulled back. And, of course, we're here in Paris, where Emmanuel Macron will be hosting a meeting of European leaders tomorrow and Friday. And yesterday, when he was on TV, he said, so far, Vladimir Putin, the way he's handled this, is completely cynical, and, quote, I just cannot stand it. So they don't want to see talk. What they want to see is real action, particularly, Tom, on the humanitarian corridors. We know that it's been very difficult to get people out, and of course that is a critical humanitarian situation. The pictures coming out of Ukraine are terrible, and of course the Ukrainian government keeps saying Russia should open up paths towards the west. People don't want to go to Russia. That's why there's been no humanitarian corridor happening for the past 48 hours. Maria, what about the response from Europeans? How committed are some of the leaders to the plans to possibly borrow a lot of money to invest in the physical greenification of the European energy system? Well, the one thing to note is that today, as we speak, there is no energy system or energy kind of qualified system in Europe. Every country has their own system. This is 27 different countries, and they all look completely different. So there isn't a unified position. When we talk about the European energy policy, the reality, and this is part of the problem, is that there isn't one. Now, tomorrow, we expect a discussion on energy. We expect a big discussion, as you said, on how do we deal with the fallout of this. Are we going to see a big fiscal package come through after the crisis of Ukraine and the war? And then, of course, there's going to be a debate about Ukraine and its membership for the European Union. Remember, these pledges are very important. NATO, the EU, and so on. This has been a huge point of tension between Ukraine and Russia. So the language around, do we want to join the EU? Do we still want to commit to NATO? This could be very important in the diplomatic resolution to this, if we can still get one.
Anne-Marie, can I just squeeze this in? I'd love your interpretation of the comments we got from the spokeswoman from the Foreign Ministry in Russia today. They said that Russia's special operation, their phrase, not ours, has no goal to, quote, occupy Ukraine, destroy its statehood, nor to topple its leadership. How do you think that'll be read in Washington?
As false. That is exactly what we see Russia trying to do. And even before President Vladimir Putin invaded Ukraine, since the fleeing of Viktor Yanukovych, and the fighting that we've seen in eastern Ukraine, President Putin has wanted to put in a puppet government in Ukraine. He's wanted Ukraine to be like Belarus and not move towards the West, still be under his quote-unquote sphere of influence. Washington will just read that as more Russian propaganda.
MH, thank you. Anne-Marie in Washington. Maria Tadeo in Paris today. Can't keep up with Tadeo, Tom. The tour of Europe continues.
Well, the tour is there for everyone, and I think it's a lot of diplomacy waiting to hear from Russia. And as we heard from the two of them, there's an intransigence here. There's just no question about it. They continue forward.
Two lines from Russia this morning from the president's spokesman, Lisa. Russia values its reliable energy supplier reputation. We might have to rethink those commitments, though.
They're trying to figure out what leverage they have to retaliate at a time when they're in an increasingly tenuous economic and, frankly, political situation.
Turn the last few weeks upside down. That's your price action today. Up 1.7% on the S&P. Crude down 2.5%. 120.70. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia has agreed to open humanitarian corridors in parts of Ukraine for 12 hours. That will allow civilians to escape from several cities. At the same time, the U.S. warns that Russian forces are stepping up their bombardment of the Ukrainian capital, Kyiv. Democrats and Republicans in Congress have struck a deal on a long-delayed spending bill that funds the U.S. government and includes $13.6 billion for the war in Ukraine. The measure would pay for refugee assistance and replace weapons given to Ukraine. And the price of oil slipped today, a day after President Biden said the U.S. would ban the import of Russian crude. Still, futures in New York have soared almost 35% since the invasion of Ukraine almost 2 weeks ago. Banks and traders are predicting that oil prices could go even higher. And billionaire bond fund manager Jeffrey Gundlach warns that U.S. inflation may approach 10% this year. He says that underscores the need for the Federal Reserve to aggressively tighten monetary policy. The CEO of Double Line Capital also said that bonds are now overvalued whilst emerging markets are cheap. U.S. authorities are investigating Barry Diller's trading in Activision Blizzard options just before Microsoft announced it was buying the video game company. Other invested trades are also being investigated. Diller denies any wrongdoing. A spokesman says he merely spotted a bargain in the market. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
prepares for the latest read on inflation.
It's going to be a big number.
We are drowning in uncertainty.
Economists predict the highest numbers in 4 decades.
Many estimates now have an 8 handle in front of it.
Not even including gas.
Instant reaction.
Keep an eye on the resiliency of the consumer.
It's not a question whether we get a recession. It's like, what kind of recession are we going to get?
And what it means for the Fed.
This trend is no friend to the Fed.
Do we lead to a slower growth kind of paradigm?
They're going to want action at the White House.
Inflation in Focus, Thursday morning at 8:30.
We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war.
The words of the President of the United States from New York City this morning. Good morning. Futures turn around, a bounce up 1.6% on the S&P. On the NASDAQ, we're up by more than 2 full percentage points. Crude lower by 2% to 120.93. Heard from the Russians in the last 30 minutes or so. The Russian government, the spokesman for Vladimir Putin, the Russian president. Russia may rethink its energy commitments after sanctions. We need to be thinking about, Tom, the counter-sanctions, so to speak, the reaction from Russia in the next few days and weeks.
I think we've been waiting for that for 48 hours. We're getting a little bit out of Peskov this morning, John, but I do agree we really need to see some format there. All we can do, John, is look at the markets and consider what the Ukrainian and Russian forces are doing. John, I'm going to go again to ruble 136. It's some stasis, but it's a weaker ruble. It's
I'll go to yields, Tom. Yields 190 on 10. Do you know what we get tomorrow? Going to get a big number. JP Morgan at 8%, Morgan Stanley at 8%, Nomura 8%, Barclays 7.9, Bank of America 7.9, HSBC 7.9. You get the picture. Yeah, close to 8.
They're going to look at the makeup of that as well and begin to form out as tentative as they can off the commodity shock of what's going to be longer. I know Mr. Gunlock's making headlines this morning, but what we've gone away from, John, is the idea of inflation one and done, if you will, has disappeared. Right now, Adam Parker, with his founder, chief executive officer, Trivariate Research, with parchment from Boston University's statistics program, which in the world of statistics is actually a really big deal. This is the one guy we talked to that actually can take the central limit theorem and try to figure out what to do with a war in Ukraine. Adam, I want you to model out now some form of the risk distribution of a growth scare, as you call it. I have yet to see a legitimate growth estimate by adults. Take a guess.
Well, the median analyst estimate right now is for about 7.5% earnings growth for this year. That's probably too high, Tom. I think it's probably mid 5% or so is a good base case. If I'm really being intellectually honest, I think the risk is more that 2023 earnings might not be above 2022, right? As we get into the second half of the year, we're still dealing with logistics, transportation, wages, commodities, oil. Yeah. You could see that pinch. So what I'm really focused on this week, I've spent hours on this, is which companies have gross margin estimates that are too high or where we haven't seen any cracks there, and do they really have the pricing power?
Okay, we're going to get you on a lot here, Adam, but I want to stop the show here and talk about the great Peter Bernstein in his magisterial Against the Gods and the idea of risk versus uncertainty. The media is throwing around the word uncertainty right now like it's a mint. Explain the difference to our audience of risk measurement versus the unmeasurement of uncertainty.
Yeah, look, there's a lot of stuff you don't know. That's uncertainty. I don't really build in things that I can't estimate at all, right? So obviously you don't forecast wars or those kind of things when you're making your assumptions. But what we try to think about it is there's a range of outcomes, try to assign probabilities to those outcomes, look at earnings potential during those outcomes, and make an educated, statistical expectation for what's going to occur. I still think the base case is corporate earnings grow. I think there's a number of companies that have pricing power. If earnings grow this year and people believe they can still grow next year, the market's going to recover, handsomely from these levels. But I think that's still the base case.
But not everyone. And Adam, I really was struck by in your research how you're talking about possibly aggressively shorting specific names. Why is this the time to start doing that rather than just simply staying away from what you don't like?
I think you can always make more money if you have the ability to long and short stocks, Lisa. I think the peak of when you wanted to do this was almost a year ago when you had the huge short squeeze that really hurt a lot of hedge funds in the so-called meme stocks. Since then, the number of stocks that have lagged the market by 20% or more has been way more than the number of stocks that have beaten by 20% or more. That's a good environment for shorting. Idiosyncratic risk, there are plenty of names that have a lot of idiosyncratic risk, and those are the ones you want to short, particularly if they miss optimistic margin expectations. So when I look across the stock market, I look at, like, say, industrials. A lot of them already have record high margins. They're forecasted by the analysts somehow to have even higher margins, yet we all know they have a lot of input costs, commodities, oil, transportation, that are rising. I don't think they can pass all of that pricing on, and so they're the ones that have below average estimate achievability. Same with, I think, consumer discretionary, where I think you'll start to see some of these companies miss materially in the second half of the year. So I think that within equity market positioning is really going to be around relative estimate achievability, particularly on margins. I think that's the key debate when you have inflationary pressures.
And you're still bearish on the stay-at-home stocks, right, Adam?
I think so. I think we're still reopening more and more, Lisa. I don't know my own. We talked about this sample size of one, but my own observations are, even with rising, lodging prices of airline, et cetera, you're still seeing demand pick up, and I think that'll continue to reopen, recover as we get warmer in the populous parts of the country. So I think you still want to be long reopening generally over work from home.
Adam, got to leave it there, buddy. Adam Parker,
good to see you guys.
at Trifarian Research. Good to see you, buddy, as always. Just got a headline from Ireland that I wanted to jump to from the Irish Finance Minister. Haven't got the numbers, but the direction of travel is important. Ireland to cut tax on gasoline amid the price spikes we're seeing. So there it is, Tom. That's Ireland first out the gate to cut tax on gasoline.
Yeah, Greg Villier's got an important note here, and he goes to Stuart Hoffman, the fabulous economist, John at PNC. I'm going to call him economist emeritus there. I think he was there the last time the Pittsburgh Pirates won in baseball. And Hoffman, it works out the same thing, John, for America, and he says it's completely doable to give the middle class in America some relief from higher gas prices, and that's from a guy that can count the beans.
Lisa, does the White House follow?
Well, how much will that actually do? Because the gas tax isn't that high in the United States, right? It's just cents on the dollar, maybe less than 20 cents, according to some estimates. So if you're dealing with that kind of cushion, it's not very big. They have to start releasing more oil reserves, and they have been having talks with people down in the shale patch. And we've been reporting on that through the CERAWeek reports.
The ban on Russian crude and the support for it, just amazing. I saw another poll yesterday, Tom, this one from Reuters Ipsos. 80% of respondents happy to pay higher gas prices if it means banning Russian crude.
Yeah, this is a really delicate issue. I get the idea $6 a gallon gas isn't going to float, but there are poll after poll after poll pushing against that.
Futures up 1.8 on the S&P. We turn around on crude, still 120. Have you got used to that yet? 120 on WTI. We're down about 3% on the day. From New York, this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City.
In London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Bouncing back from 4 days of losses on the S&P, we're positive 1.7% on the S&P 500, on the NASDAQ up 2%. A lot of people talking about peak sanctions today. Peak sanctions may be from the West. What about the reaction to the action of the West, the reaction from Russia? They've got to flesh that out still. We've got to wait. Going into tomorrow, CPI in America. Look at this in the bond market. 2-year yields, the highs of the year. In fact, the highest going back to late 2019, just short of 165. Yields up by 5 basis points. The spread between 2s and 10s in and around 25 basis points, Tom, going into a CPI print that could come in close to 8%.
Yeah, again, it's the makeup of CPI, Jen. It's so important.